All right, guys, we'll go ahead and start. So if you've been through this class on VP with me, I've added some stuff, some examples for you guys, and you'll see, in the new version of 4 that's not going to be anywhere else but in the Discord. I'm going to add more stuff, but at the same time, if you guys have questions or suggestions where you're stuck and what can help clarify, if I can explain it, add it to PDF, or even talk about it, please ask. Because some of you guys are getting into the advanced levels of the volume profile where you're understanding the structures, you understand, where the supply is more aggressive than demand, when the supply takes the low, breaks the structure. Those type of things is what you want to be paying attention as you scale into the knowledge into volume profile, okay? So now, okay, we got the Einstein here. So market auction theory. So the whole market, believe it or not, kind of evolves around this. It's about buying and selling, and it's whether stuff is imbalance or imbalance. Balance means that, if me and Dumpster are buying, let's say, PlayStations, and we're happy, he buys it for 450, sells it to me for 500. I keep buying it, he keeps buying it, I keep buying it from him, and we're just happy. But let's say that there's news of shortage or something, and then Dumpster jacks the price up to 850. So now the new information that he gathered, whether it's from suppliers or what that might be, drives him to change the price. So if his supply is going to be hurting, that means he's not going to be getting as many. So he's going to increase the price for the ones that he has. And now it's up to me to figure out, well, am I willing to accept the value at 750 or 850 for that PS5? And that's pretty much how the stocks work as well. So a lot of guys that I see on Twitter, a lot of experts on Twitter, they say that there's more buying or selling. From the new people in the Discord, do you guys understand what that means? Don't make me call you out. If you're new, just try to explain it if you understand that.
There are more aggressive buyers and more aggressive sellers.
But is that more buying or less selling? Is there any concept of that?
The buying and the selling stays the same. It's the acceptance of the balance or the imbalance.
That's correct. So a lot of times, and I see these people they have 200,000 followers and they're misleading the people where there's more buyers. Well, if I want to buy a PlayStation from somebody, what does the other person have to do?
They have to be willing to sell.
They have to be willing to sell. If they're not willing to sell, well, I can't buy it.
That's correct.
So when I see like a guy posted a supply and demand class, and at least 10 bullets, he writes that there's more buyers than sellers here. And I think people get the wrong idea in their mind. Way back when I saw that, I'm like, dude, how can we have more buyers than sellers? Like, you really can't. It's 1 for 1. But you can have more aggressive where they go with market orders, right? Where they take off their limit buys and they go and convert them to market orders, because market orders are not on a tape. So they can switch that style and cause an imbalance. So you guys remember, there's initiative buyers and initiative sellers. Those are the aggressive the balances.
Those are the ones that move the market, right? Aggressive buyers.
That's correct. Or sellers.
Yeah, okay.
And we call them initiative buyers, initiative sellers. When you're in a range like we are here, for instance, in the top right, you have responsible sellers on the top of the range and responsible buyers on the bottom. And until the market breaks this equilibrium, right, it's not going to go anywhere. So many times when we are consolidating, to me, it's the easiest money you can make. And we've traded it live where you just short the tops, buy the lows. Short the tops and buy the lows. And if you're not 100% sure, you guys know about the POC, draw a consolidation POC in between, and boom, it works. On trending days, a lot of people are so hesitant, and that's when they lose money. And that's because you're trained to think that it's fake. A lot of time, 95% of the time, we spend in a balance, right? On bigger time frames, a lot of times we're in balance. You got to exclude years like 2020 and 2021. The repos, we had almost $2 trillion pumped into the market, and you'll see the consequences here in a couple of months. But that doesn't happen often, right? The 2021 happens, you know, in cycles. Probably the next 20 years, 20, 25 years going to happen again. So don't think of it, oh my God, yeah, man, I'm going to buy the bottom and this is going to, you know, rocket to the moon, V-shape. I don't think the next one is going to be so much V-shape. If you think about 2008, I think it's going to be 10 times worse than 2008. So market can do whatever it wants as long as there's buyers and sellers, independent who they are. And I posted something in Discord a few days back about the baby boomers owning, I think it was $20 trillion worth of stocks. And some of them are, you know, getting older. Do you think they're selling and taking the cash with them, or they're keeping it and going to take it to their grave?
Selling.
Well, if I was a baby boomer, what would you do? Let's say you
Dude,
have
I'll be
$15 million.
Sell it.
What?
You
You won't
can't-
have another opportunity to catch a bull run, most likely.
That's the
And I'm
fact.
pretty sure the advisors that they have, they're like, hey, this would be a good opportunity for you to sell. And what do you think those hedge funds are doing? It's like, yeah, sell it to us, please. Sell it to us when it hits the low number and we'll buy from you, you know? And then the new investors come into their, you know, business. And then
And
they're
they
like,
say
hey,
go
you want
high.
to buy, you should buy AMD. Well, then they load up on AMD at low prices, right? While they put the fear in the market and still no news. And then once AMD is ready to break balance, what's going to happen in here? Is the new information is going to come out. AMD building something, AMD new chips, AMD partners, and then all of a sudden you see the test of the break of the balance area, what's in a cooling book. You break it, you come back, and then you proceed higher. Okay. But does everybody understand this slide here?
Yes.
New people.
Yes.
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 And this is this chart, if you take every single indicator on and you just look at it this way, you will be 50% more profitable than you are right now. And if you just keep this slide on every slide, you just copy and paste it and put it there, you will see and just play the retests. When you break the imbalance, most retail buys right here, right? They don't care about the retests. They've never been trained to play the retests. On rejections, it's slightly different. It's a two-step process on rejections, right? It has to break above, make higher highs, not break the major supply here on the break of structure on the higher time frame. Excuse me, once it gets back into the range, you're looking for the retest of that, whether, you know, this is our SSL high or if it's a value area high from the volume profile, the line here, the red line. We'll get into it.
Shorty. Okay, you're getting into it. Yeah, I was going to explain that again because I'm sure a lot of people got lost in
No,
that.
we'll get into it. We'll get into it. I just want to give them a bait and then let them wonder what that is. Okay. So the market auction theory, honestly, this is pretty much you can put your whole life into this. Price, time, and volume. When you think about price, we can use this as a discovery, just like we talked about PlayStation, right? If you increase the price to the point where it has no value, what happens to his supply? Well, let's talk about Nike. Did anyone read the report from Nike?
No.
They were down.
Okay, why were they down? Did anyone read it? You guys need to read sometimes these reports. They will help you.
Had a discount because they had too much inventory, I think.
Oh, there you go. So they, you know, first they misjudged the time. So the times of people spending money relentlessly, they were slowing down. Because if you guys think about it, 6 months back when we talked about 8 months back, I mentioned this was the hottest market for people looking for a job, but I said it's going to quickly turn around and it's going to hurt the middle and low income people. So people in professional, you know, environment, let's say finance, technology, accounting, those guys will be okay. Not all of them, but the majority of them will be kind of 80-20 rule. The 20% is going to be put into a supply just to create the unemployment numbers and then slow down the demand. Do you think rich people buy more useless stuff or middle income and low income?
Middle income.
No income.
Yeah, that's why they're in middle
low
income, low income. It's because they buy stupid shit. They go buy 10 pairs of shoes when they can't even afford the first 2, but they finance the 8. They're the one driving the economy. They're the constant consumers. Like I have some rich friends and they have 2 pairs of shoes, one for work and one for house. And I'm not kidding. They don't need more, so they don't buy more. But they do buy a lot of shares and they build the wealth, right? So that's the difference. So the price and time is what something, companies misjudge. Like Nike, they loaded up on inventory, right? Independent, where it was built, how was it transferred or not, where it needs to be. Now you got all these costs, right, of transport. Now you have the FX rates that might hurt you a little bit if your cash is outside of the United States, because then you got to convert it and buy back dollars. So all of those things in terms of price, discovery tool, well, they probably jacked some prices on, shoes. I haven't been following shoes prices, but I'm pretty sure they jacked the prices up and they were testing. Same with cars. You guys even posted in the Discord that there was some Toyota RAV4s in California going for $95,000. And it's like, I'm sorry, but it's not a Mercedes. It's a Toyota, right? I mean, so they went. It's like, okay, well, let's see how much are they willing to pay for this Toyota RAV4? They put 95. Well, if they sold 3 of those, let's say 95, that's 300K. Typically they're 40K, right? So they sold almost 5 cars equivalent in 3 cars.
That's the test, right?
No, well, they're just discovering the price, see who's willing to pay for it.
Gotcha.
And there's always somebody willing to buy something. But it doesn't mean it's going to be aggressive buying at that level. And if the diminishing, the demand is diminishing from the top, then you get a little curve and you start going up. Your inventory stays there, stays really high, like Nike. And then you're like, yeah, our margin is really low. We had to discount a lot of our inventory because we overbuilt and overjudged how long this bull cycle is going to stay on. And the only company that had a proper hedge against all of this was Apple.
Of course.
So, and good companies find a way to survive through this. You have companies that are dependent, on the bailouts and the government. When you think about Delta, 2020, we bailed them out. A year before that, they gave out like, I think, $1.2 billion in bonuses to their employees. And then they bought the shares back. Yeah, they don't have to worry about it. The government will step in and buy it, right? Not meaning to go in politics, but that's the price, time, and volume, right? So the volume is the measuring tool. The higher quantity traded, the more interest in it. So we just talked about it. Toyota RAV4, if you only traded one at this price, discovery price, at the time when it was the hottest market, well, maybe it was telling you something. People are not interested in paying $90,000 for a car that's usually 40. So when you put these together, right, this is your value. Price, time, and volume. This is your value, and you can apply this to your life as well. And the only thing that you can't get back is the middle one.
Yeah.
And when
So
you guys,
basically time lost, right?
I'm sorry.
Time.
Basically time lost.
Yeah, well, and
Yeah.
when I tell you guys, so for new people in this Discord, we focus more on compounding. And if you're not familiar, I'll give you guys an example of how it works. If you take $1,000 and you compound it for, let's say, 2% for 260 days, do you guys have an idea how much money will it be? Or any new people?
I mean, 2% every day.
Yep.
I don't have the exact measure right now, but yeah.
No, just rough number, like
600 plus.
I'd say over
Okay.
a million, maybe close to
over
2
a million. It's gonna be over a million for sure. But where we as humans, go sideways when you're trading, you make $300. Let's say sometimes, I think Friday I think it was Friday, we traded SPY twice in 10 minutes. Both trades yielded over $500 for me on 10 contracts each. So I made $1,000 in less than, I don't know, 10, 15 minutes. If you were to put that in perspective of a real return, that's a really high return. And people are not satisfied. And then where you guys start making mistakes is that you believe, that it's the same setup again, but you're aggressive. It's really not the same setup. It's just that your greed kicks in and you want more money. let's say your account's 5K and you made 1K, that's a hell of a return on a daily. For 10 minutes of work, that's a lot of money. If you don't believe me, I always tell you guys, go do some work outside somewhere, like hard labor, and see how long it takes you to make 250, 300. It won't be a couple of clicks. So the first is,
Very
respect.
hard.
It is. It's very hard. It's going to get harder too, especially if the shortage of dollars is going to come. If the quantitative tapering, what they're doing now, reducing the supply, is going to get harder to get dollars. Not only in US, but everywhere. So the market participants, right? So we just talked about this. I think we beat it to death. So you have the aggressive and passive. The aggressive ones are basically that they use the market orders. If they know something is coming, or if they're just retail and they want to, kind of FOMO into a stock, they use market orders. They have no idea where they should buy or not buy. They just hit a market order and they get in. The passive guys, what you see on tapes, right? If you use any, L2, L3 tapes, you will see on L2, you only see about 10 rows up, 10 rows down. On L3, you can see the actual limit order sitting on the tape, whether it's, $150 away or $100 away, you see them. And sometimes that creates supply and demand, right? Because if I'm waiting for a price to come to a certain level, I'm a passive player, but I'm a responsible buyer. And a lot of you guys experience this in your life. When you go grocery shopping, how many of you guys wait for a sale for something?
I definitely wait.
I do.
Well, that's called responsible buying. If you know, I don't know, don't quote me on any of these prices. If you know a 12-pack of Coke at Sam's Club is going on sale on Wednesday for $3 and it's buy one, get one, or whatever, or regular price is $8.99 today, do you buy today at market or you wait?
You wait.
Most people, responsible people, would wait.
You buy Pepsi instead.
Or you buy Pepsi instead. We won't go on those goods. Elastic and elastic. But aggressive and passive, that's literally what that means, guys. If you want the Coke right now, sure, you can have it. And all these, is anyone familiar with Quick Trip gas stations?
I'm not actually.
Yeah, so it's
Yeah, we have a bunch of them in Texas.
Yeah, they're growing super duper fast. And it will soon become your favorite gas station to go to. So it's a 24/7 gas station. They have a really cool business model. And it's, of course, a convenience store. It's nothing else. You pump the gas and then you go inside. They have all kinds of foods, burgers, breakfast burritos, whatever you can think of. And that's where they make money. One of the guys that works for them high up in the corporate, he explains that they have margins of over 200% on food. It's like you come in for the gas, but they make it so enticing and welcoming to go inside. You get a drink, once you get a drink and you smell it, they keep the kitchen open for a reason. All that come in and you're like, okay, well, I'll just get a little burrito or something, for a snack. And you walk out, you're like $12 out. I pump the gas, they make a little bit on the margin there. And then imagine 1,000 people come through per day at $12 a piece.
That's like Walmart here.
Good profits.
Yeah, they make good money. And that's, but you can get the same food much cheaper somewhere else, right? It just happens that you're an aggressive buyer right now in a convenience store. I mean, option was that you are passive and you ate at home, right? Or that you went to a restaurant somewhere or something that's cheaper where you don't pay $2.50 for a bag of chips. So that's the difference between aggressive and passive buyers. So when you're trading, it's much easier when we play in the trades, when we say, hey, the retest of POC is coming, I have my order in. At that point, am I aggressive or passive?
You're passive.
You're
Passive.
passive until the price hits where you will be
Responsible.
aggressive.
Exactly. So I'm passive until it comes to the level that I have, and then that gets converted to a market order, right? As soon as it hits. So that's why, some of those flows that you guys see, whether, unusual whales or whatever they're called, they're not really directional. They're not directional ever. You can't know if they're directional or not. There's so many order types and how it gets shown based on the order type. It's so complex that you can't match these orders. and like Tradedics and all these that try to match them. Yeah, sure, above ask, but that doesn't mean it's it's gonna go up. If it was that easy, I think all of us would be billionaires here. It's impossible to match orders. That's all I'm gonna tell you. So, and then this, you know, these markets, these buyers and sellers, as you guys know, you have the aggressive and the, so you have the initiative buyers and sellers, and then responsible buyers and sellers, and that's the four that we mentioned in the PDF about the buyers and sellers, and that's that's mentioned also in the Pivot Boss book. If you haven't read it, it's a really good book. Okay. So on the tape, how does it look like? You know, if you guys don't use tape, I don't use the tape a lot, but I like to look at if we are stuck somewhere, I want to see if it's kind of absorbing or if it's going to pop. To look at the orders. This is, does everybody understand this, or is there people that are, when they see a tape, they're like, man, what the hell is this?
And like the top usually and the bottom, like the bid and the ask, but sometimes
What the hell is this?
Okay, all right, well, fair enough. So let's give you an example. What is the highlighted price yellow here?
I would say that's the like the limit price.
Anyone else?
Is it mid price?
That's the mid price or current price.
Yeah, I would say current price.
That's
Mid
your, if
price.
you're to click market order, that's where it would take you. To the $100. So now when you look at the tape, right? When you look at the buying, the first in line at 99 is 50 buyers. In order for this price to go to $101, what needs to happen?
As in the $100 needs to be filled first before you go to the next one.
That's correct. The sell on 75. Oh, I guess I explained it here. The sell of 75, the buyers need to consume the 75 at this level. So if you have 75 PlayStations at 100, we need 50 limit orders, you know, to tighten up, or a market order that comes in and buys 75 at 100. Then you go to the next section. And the same thing is on the opposite side. If you want to sell, if you want the price to go down, well, these buyers need to be consumed with the selling. Same way. Does it make sense to everyone now?
Yeah, that makes sense to me.
Okay.
Yes.
Okay. Who can explain an exhaustion? What would this look like? Don't read the pump, you know, the bullets. Can anyone explain it?
Number of orders less on a particular side, like buying or selling.
Yep. So when you think about it, if I am, you know, at various prices, if you think about eBay, they have, you know, let's say they have 100 PlayStations, and at each price it starts at 25, quantity at 100, 101, 102, 103, 104. And on the other side, you have a lot more demand. People want the PlayStations. You have a line, right? Like you do in front of Best Buy sometimes. Let's say, you know, you have 250 people wanting to buy these 100. Well, the price is really going to go quickly up because there's not enough supply to provide it, so that the supply is going to be eaten up really, really quick. And that's exactly what happens in the market auction theory, right? This is it. If the supply, you know, is not much supply there, basically they go in search of more liquidity and they break it. And then once you reach the level of 105, things get a little tight. You know, 105, 106, you're going to be a little bit of fight in between those levels, and that's probably a good profit level if you're going long from 100 to 105 or 104. So, and the same thing will happen on the opposite side if you flip it. If the demand is lower and it's higher supply, more aggressive supply, what happens? So if you put these 180 numbers on the bottom and it's really aggressive selling, and the buying is not as aggressive, what happens?
Price drops.
They're gonna start lowering the price.
Yeah, they're gonna start lowering the price, just like Nike will now with their goods, right? Oh, you guys don't want these, I don't know what shoes you want, running shoes for 100. Can you pay 80? People are like, no, we can't pay 80. They're gonna be like, okay, what about 50? It's like, nah, I can't do that. And they're just gonna keep going and digging the, you know, the profit margin 10 and 10 and 10 till, you know, then they're gonna be like, okay, we'll just take a hit on this and write it off. Because at one point, companies, not in a stock market, but at one point in companies, and you've seen this with other brands, they would rather throw it away than people to have it. You guys know that?
Kind of like those like luxury brands.
Yeah, they will rather burn it than throw it away than give it.
Jeez.
Abercrombie and Fitch does it. Of course, the big boys, I don't know, the Gucci's and all those, they will burn it before they give it away because they don't want to make that brand readily available to all. So it doesn't apply here directly, but there's some of it. Okay. So this, most of you guys should be familiar with this. You have the market order. This is your, most aggressive. They do not show up on the tape because we don't know who's going to hit the market order. You have the limit, you have the stop and the stop limit. And then from these four order types, somebody needs to go mute. From these four order types, there are additional order types that you can use, right? You can use market order to buy or sell or close, buy limit. There's different variations that you can generate from this. Majority of the people, when you're trading options, some use different strategies, if it's debits or verticals, butterflies, whatever you might be using. Me personally, I just go long or short. Sometimes I'll sell a call if I'm really heavy into a long position and some stuff is not going in my way. I'll sell the calls above and collect some premium to help me offset the cost. And I also do covered calls on my shares on like AMD and stuff like that. I will sell some covered calls and collect the premium. If I do get assigned in some instances, I don't mind, especially if I'm selling puts. When we are really, really low, I'll take the shares and average down. Okay, so this leads all to volume profile, right? So all of the price, volume, time is important, right? But price and volume is a lot of times what dictates the movements of the stock market, right? So you have market profile that focuses on time. I don't use it because market can be in a short period of time, create an imbalance from there and go on. So that zone of time opportunity is not really interest to me as much as the volume is itself. So when you think about volume profile, you guys are all familiar with the vertical volume profile. That's per time. Horizontal volume profile, what it tells you at what price was the volume highest. And that we can use, to distinguish, are we above some certain level of, point of control from before, below value areas, and then we can determine, are we more biased, like towards bearish side or bullish side, based on understanding of the volume profile and kind of the structure of the market. So that's volume profile in a nutshell. A lot of people did not use volume profile till a couple of maybe years back. You had to use it, maybe 15 years back, you had to calculate it manually to figure this out. And, then there was a pain in the butt. The market moves really quickly. The high frequency trades kind of made it impossible to execute that. So when you look at a horizontal line that's sticking out, that means at that price there was a lot of contract shares traded. The more trades you have, the longer the line gets, and same on the vertical, right? The more volume you have for that day, the bottom line is going to be, increasing, maybe compared to relatively higher compared to the other ones, but it's going to go up. And we use these horizontal shelves as support and resistances, and we'll get into that. Okay, so the bell curve, it's fairly important when you study the value area to understand the bell curve, right? We use 68.2 just for this purpose right here. It's one standard deviation on the normal distribution, right? So it's 68.2. We are looking for all the volume that occurs in 68.2. So the extremes of this is called value area high and value area low. The top is value area high, the bottom is value area low, and anything in between here, that means a lot of volume was consumed in this section. So most likely that's called equilibrium, aka balance from the first slide. But for us, balance is called value area high and low. And some people, does everybody know what the fair value gap is?
Where the price doesn't step down.
Can you explain that? Yeah, I was looking for.
Well, let me ask if someone who understands it first.
Okay.
where the price doesn't stay for long.
Okay. Anyone else?
There's like still orders left. The price flew through, so there's unfinished business. It's like it painted the wall once.
Okay.
Well,
Fair
you got
value gap is the
imbalances.
same thing as imbalance. So if you think about it, fair value gap is basically you go from here, right? What you just said, and you come back to it. And like you said, there was orders left, people were not filled, so they bring the back price and then they go higher. So that's fair value gap. I just want to make sure everybody's tying this because a lot of times you guys hear different terms. So balance, value area, and FVG or FGV, whatever they call it, is the same thing. He created an imbalance in smart trader style, and then you're always going to drive back to that fair value gap or the balance imbalance. So everybody understands mathematically why we use this. And if you're to flip this, and we'll flip it actually in one of the slides here, this is your volume profile. And if you look here, this is 68% of your volume is between value area high and value area low. What's the red line?
POC.
What does
Point
it
of
mean?
control.
Maximum value, where the maximum volume is being
50% POC.
No, not 50%. It's the highest volume traded for this day at that price. So the highest number of shares was traded around this price here. And from this, we can gather a lot of information, a lot of setups, right? So now, if you know that 68% of the volume is traded between these two lines, value area high and low, and like I said, value area high is just the extreme top of the value area, and the value area low is just the extreme bottom of the value area. Kind of inflection points for trading, and you'll see. Any questions on this? You have to understand this, what it is, why we use 68.2, and then just know these lines get respected really, really well.
when you say respected, it means they act as support and resistance, all
That's
three of
correct.
them.
Correct. All the time. These are the only three we care. Okay. So I'll skip this and I'll come back to it. So this is, I flipped the bell curve to give you guys a visual. So this 34 plus 34.1 is the 68.2, which is your value area high and low. This is the range where one standard deviation of volume traded. And it's important to know this and remember it. Every time you hop out of the value area, whether it's session or weekly or monthly, when you hop out of it, what does it mean?
Imbalance.
Imbalance.
You're going to be imbalanced. And something that tells us a little bit more about this imbalance is that there's no liquidity above. So it's going to fly through those levels. So like if you think about it, if 68% of the volume is here, then look at the remaining volume here. Right? And you have a little bit more in a third standard deviation, but that's useless. So when you think about it, a lot of it is already here. Once you pop out of these ranges, there's a high chance you're going to go in imbalance and do what?
Retest.
No, you're going to search for new value. First,
New
you're going to see
value.
if
Yeah,
you're
sorry.
accepted. First, you see if you're accepted, right? If you break out of the imbalance, you see if you're accepted on the new value. Once you bring it here, yeah, great. If you're not accepted, it will look like something like this. You break the value area high on the top, you come back inside, and you don't short here. You short a rejection from the inside.
Yeah.
Okay. Okay, so the VPOCs, I don't want you guys to get confused if you're fairly new. So usually I call it POC for point of control. In my world and this Discord, the VPOC means something else. It's a POC that hasn't been tested yet. And I'll show you guys even live when we look at some charts. When you look at the POC, let's say on daily sessions, and we went away from that price and we never reached it back, that stays as a virgin POC or naked POC. And those tend to be really good magnets for bringing the price back up. And, I think 8 weeks back, I mentioned SPY was going to hit every one of the VPOCs that were below, and we nailed every single one of them.
or drag or back down, right?
It works both ways. Yep. You
Yeah.
just have to know when it's real, when it's not. Okay, so let me see. Do you guys want me to save this, or you guys want me to try to explain it without showing you live?
Maybe showing it live would be.
Do it live, yeah.
Okay, I'll show you that. Fixed profiles, right? So in in TradingView, they have a cool feature now where you can grab a certain period. For instance, grab the volume profile from here to this arrow here. So meaning I'm grabbing the imbalance where it starts. You could have grabbed it here as well. But this candle when it broke the previous higher low, and then you sell it to here. Why do you guys think I would grab this from new people? Why?
I think because like when I've been using it, sometimes when you're just going off the daily forming, it could be, I don't know, it's not as good as like grabbing a high point and a low point. Then you're like, oh, okay, now I kind of get a better sense of where we are right now in relation.
Okay, but what does it tell you?
Gives you the big picture for like 5 or 6 days or whichever that period is.
Well, here I'm only grabbing. I'm not grabbing days. I'm grabbing. Let's say I can grab this in 10 minutes, guys. Here, let me.
What is
That's
it
the
looking
value
for?
area high and value area low.
Guys, I can grab this on any here. I can grab this on this time frame. I can grab it here. I'll grab it from here, where the imbalance started, to here.
You want to see where the sellers are.
Oh,
Bingo.
there you go. So I'm interested to know where the highest sellers were. I'm grabbing a trend down from swing high to swing low, right? So for me, I'm interested to see where the heavy sellers are. So we know the POCs here at what, 37, 33. Obviously we rejected from it. We never came back. We have a little bit of a, mini POC here at this 38.66 level. And then you have the value area low. This value area low, once you break it, right? I don't short here. If you're a momentum trader, that's okay. You can short it here. I don't short it here. Where would I short it? Anyone know?
On the retest.
The
Yeah,
retest.
usually I would take this retest, and then if it's another retest here, I would take a look at that as well. And I can also grab another POC and look at this and be like, okay, well, let's see what's going on. Maybe if I grab the right tool. So now, what I can tell here, so there's a little bit of a node here. Once you break this value area high, it seems like you're really going to dump and go to the bottom of the value area low. And that's the reason why I'm using the fixed profile. I'm looking at segments of the market and seeing how we're behaving. And you can see here, what did we do here? I mean, I can go on. Let's see. If you guys look here, we broke it. And look, we tried to bounce here, and then we kind of broke in, right? We broke inside, and then, your target would be somewhere around here. And look at that. So 36.83, let's call it 36.70, all the way to 36.48. That's a really good move, guys. It's a lot of points on ES and a lot of points if you're playing SPX or whatever you might be trading. It's a valid move. So now if I'm interested to see, let's say getting ready for tomorrow, well, I'm looking at the last sell-off here, right? If I look at this, it looks like the problem is going to start at 36. What is this? 24, call it. And then a nice rejection would be, a quick rejection, because I'm not grabbing a lot of time. I'm grabbing only from 11 to, what is this, 3:45. So I'm less than a day. So if we are able to come up to this 36, call it 53, 55 area, and usually what I do, just so you guys know, is I grab the area around it. I don't just grab the POC and use it. I think of it as demands and supply zones rather than individual levels for trading. Like even this one here, if you guys look at it, you guys know that, I care about the low volume nodes being as a protection. And here, this would have been mine. I would have protected that area here. And if you draw a line right off of it, you'll see that they protected it on the long side too, because they knew there's a little gap. And then look, you came back here and boom. And you probably could have caught it, a few times. But this high here, you know, obviously made a higher high here on, you know, in 15 minutes. It made a higher high, and you can see here, we were not able to hold that for a very long period of time. But, you know, from points of making multiple higher highs, it never did that. It just made one, and then immediately next one was lower high. Okay. So that's the fixed volume profiles. And if I wanted to do the opposite, right? So let's say I wanted to do, if I wanted to know where the buyers are, right? I would grab the imbalance. There's a nice imbalance here. And then, you know, if you look at this, there's a nice imbalance here. We started it there. You know, if you above the POC here, you can look for a retest. There it goes. You came back. You could have caught that. This would have been your, you know, nice profit target. Well, probably a little bit lower than that. This would have been your profit target right here. So you put up, you know, 37, 20, 14, 15 points on ES. And if you guys are not familiar, does any of you new people trade ES?
I don't.
I trade SPY, to be honest.
That's
Bye.
fine. So each tick on ES is $12.50, right? So 15 points on ES is a lot of money. So, and you know, if you trade SPY, you know, and you're looking at similar moves,
Like $750.
yeah. So 15 points yields that much. So if you look at this, right? Same thing with SPY here, right? I mean, once you break this level, you're gonna go higher. You could have done the same thing here. This is just an awkward volume against the gap down hurts it. So here's for tomorrow, for instance. So tomorrow is going to be interesting, right? They're going to have 360 level right here. There's going to be major resistance for it. And here you have value area low. So you use this on different time frames, depending on what kind of trader you are. If you're a swing trader, you want to look at something like weekly or daily, right? For instance, if I was looking at this right here, if I was looking for sell-off from here to here, I could have done that. I could have done sell-off from here to here, see where it was going to reject. If I did that, let's look at it. So there's this sell-off. There's that sell-off there as well. So you're able to see, and then you have the high volume node here on the bottom. Now you can kind of formulate where you want to take the trade. If you take the retest here, right, then your first target probably be right here somewhere at 399. Second one at this, and then of course you can figure out the remainder of the levels by knowing where the buyers were initially. And then you would know, you know, you have buyers here, you have buyers right there, here. And remember, this volume profile only looks at this data. I don't know any of this. I'm just telling you where the bounces are going to happen. And then you have POC here. And we came right to it. And now, if we start reclaiming some levels and get like a little dead cat bounce, well, there's a high chance probably, you know, you can draw from here to here, and it would tell us literally where this major sell-off is right now. Now look at this. And believe it or not, we're going to go back up to this level. The markets just don't go straight down. They need to, you know, they move it. And right now, more so than ever, options move the markets. As you guys see, certain closes above certain price levels, right? It's market makers making sure that they're not paying people. So that's the fixed volume profile. Does that explain why? So if you're grabbing a swing high, swing low, you're looking to see what?
Where the buyers are, where the sellers are.
No, swing high, swing low. Like if you're looking at
Oh,
a downtrend like this, it's sellers.
Yes.
From a swing low, you know, it doesn't matter which point you grab, as long as you're grabbing a trend up or trend down. If I'm grabbing a trend down, like from the top to the bottom, I can grab the same profile from here to here. What matters is the trend. We are trending down, lower highs and lower lows. That means bearish. Here we have higher high and higher lows. That means this was a bullish trend, and this is where the buyers are. So here's the buyers, and here's the sellers. Okay. So we go about the fixed range, we cover that, visible range profile. So if you go under indicators, you go under technicals, you click volume profile, you're gonna have a couple of them there. So we talked about the fixed range, visible range volume profile is basically whatever you see on your chart. For instance, I'm seeing data from May 12th to now, it's gonna build profile of whatever is visible on the screen. So if I change this to weekly, it's gonna change dramatically the, how it looks. So now if you guys look here, and I don't have to do a lot of work, but I can get an idea where the next bounce can happen, right? So there's a bounce probably waiting to happen here. And then I would say here, and what does that line up with?
COVID highs.
Pre-COVID highs. And then you can kind of look at the volume profile and be like, okay, well, I understand now the shelves, this level here is going to be protected just because the gap underneath the skinny belly. And then when you mark these levels, right, sometimes you won't see them on 5 minutes, right? You guys see, I don't see it on 5 minutes. So it's important that you note it like, hey, this is my big shelf, skinny belly below, just so you know. Once you lose this, what does it mean for your next level, right? The importance and the strength of it. So keep that in mind when you do it. So that's SVP. Any questions on SVP? Or I'm sorry, visible range?
And usually when you do the fixed range, it lines up with the visible range.
Yeah, if you do the same thing, if I chart it from here, so let's say if I grab it from here to here and I turn on, I don't move anything, it's gonna be the same thing. Here's your value area low, here's your value area high, the highlighting stops on this side. There's that, and then POC here, maybe slightly different, but 398 versus $1 or whatever that might. Maybe I didn't grab something identically, but yeah, they'll keep it the same. Shelves are the same. Everything looks identical.
So you can use either or, right? Shorty.
You can use either or. It's just that you have to scroll. Now, if I move this, my volume profile is gonna change.
Gotcha.
So I'm grabbing more data, right? So that's visible. Session volume profile. So this is what we look at a lot, right? On 30 minutes, if you guys look at SVP here. So this is your day session, right? Meaning one day is in this box here that's highlighted. There's a full day of futures or whatever I'm on SPY, a volume profile that's gathered. So if I look at this, right, you also pay attention to value areas, whether we're making higher highs on value area highs or lows. And the same like price, we're trending down, then you're kind of consolidating here. And then you see us making the lower low on value area low, but we still made a higher value area high. Made a higher high and a lower low. And then on 30 minutes, remember, I'm telling you time frames to pay attention to. When you use 30 minutes on the session volume profile is the one where we mark the levels. So like this would be the POC. And you'll see that we mark this one PD POC. PD stands for previous day. I color code mine. You don't have to do it if you're, not all that interested in it. Then we mark the levels on 30 minutes for these, PD value area low and high. Does anyone know why we mark these for the previous day?
Yes, because the current day hasn't developed yet.
That's correct. But why is this one more important than the day prior?
Because of the short-term memory of the market. The recent one is good.
Say it again.
It's because of the market's recent memory is good, like rather than taking the older one.
That's correct. That's one of the reasons. But there's a specific setup that we look for off of these levels.
The 80% rule?
80% rule.
That's correct. One of the reasons why you mark them is first for levels for areas where it's going to bounce, right? Then it's the 80% rule, which basically executed here perfectly, right? And I think Matteo and a few others were calling it in the Discord. And look at the beauty here. So we went above the value area high, right? And I'm just gonna bring one of the slides here so you guys can. Okay. So if you pay attention only to the 2 boxes, right? I'm just gonna hide this for a moment. So everybody see that I marked these areas, right?
Yes.
Okay. So this is my value area high here, and I usually color code them, but maybe I'm being lazy today a little bit. So this is purple for me, the green and value area low. And this would be PD area low. And same for value area high. So now you're looking at the market, right? So we had like a little, I guess on 28, what was that? Was that a Friday? No, that was Wednesday. So we had a gap down. We were really never close to filling this gap. And then you see the price develop from your pews. We go above the previous day value area high. And if you look here, you know, we didn't open above it, and it doesn't matter. If we go above it, if we go above the price and then it falls back inside the value area, what does it say this is?
It's bearish.
It's a very bearish signal. Not only that, but since this day, this is about noon. Once we get to the 80% rule, we want 3 5-minute or 3 10-minute candles closing inside the value area low, and then there's 80% chance what?
It's gonna go to the value area low.
Okay, well, I would call this success. So if you take this trade, right? If you take the retest of the 80% rule, you put your stop loss dependent right here, probably somewhere around the wicks, right? So you're giving, you know, this is what is this? About 52 cents risk. So if you're playing this rejection here and you're 52% risk, watch this reward now.
Yeah, well,
Do you guys need more than one trade if you can nail this?
hell no.
Guys, you just need one trade per day, and you wait for it. And I encourage and I challenge you guys to do only one trade per day for 30 days. If you're new and learning, just one trade per day. I know people in this Discord that basically came from ton of negative to a lot of profitable once these rules were applied. And that's quickly, you know, the number one bullet. And the same can be said if the stock opens below, right? So if
Shorty,
you're
quick question, Shorty. Like the one that you had drafted, there was a sort of a fake out on the earlier, right? Like around probably like if you just go on the left side, there are 3 candles
where?
closed below the value area high.
Which one? Sorry. This one here?
Probably the yeah.
Yeah, but this never explored the outside world. It needs to
Okay,
go
gotcha.
outside, right? Look, the price opens above the value area. It needs to go above. It needs to go higher.
Okay.
So
Got
it
it.
needs to make you think that this is gonna be a bull run where we're going, and then they're like, okay, well, never mind. What we're gonna do is we're gonna go up, and then we're gonna go here, and now you entered 80% chance. I'll take the 80% rule because there's 80% chance it's gonna go to the value area low. The odds are in my favor once this happens. They're really high odds that I'm gonna win this trade. If I don't, well, then I lost 50 cents on this and I'll be down, and that's okay. Not every one of these is gonna work. If it did, you know, all of us would be fairly quickly billionaires, guys. If every setup, if every symmetrical triangle worked as drawn, right? So if you have this and they say, hey, if it breaks the top side, you go along, right? How many of you guys would just play triangles if it worked every time?
I would
Probably all.
full port
Yeah.
You all the time.
25 times in a row and be a billionaire.
Exactly. So, and that's not how it works. You have to read the price action, and the price action in terms of volume confirms a lot of this stuff. And a lot of times when people are like, even, you know, last week or week prior, somebody said there's no way Apple goes to 120. And, you know, my comment was, look, okay, that's your belief. If you don't think it's going to go to 120, that's fine. But you have to read the price. You have to understand the volume on how it works and where it's headed, right? So a lot of people make assumptions and you guys make comments from something that you don't even understand. You read it on Twitter or Facebook and you're like, man, I'm an expert. Well, no, it's just real life. I mean, everybody's doing it. You know, was I at fault sometimes for the same shit? Probably, yeah. But then you got to learn how to, you know, embrace it and know when you're wrong. And you know, us as traders, the hardest part is accepting that you're what?
Wrong.
Yeah, it's the hardest point.
You need to get out.
So same concept on the downside, right? And I'm just gonna go back to the chart, like the second point. So I'm just trying to give you guys visuals so you guys can understand it. So if you look at the value area, let's say this is our value area here. I'm not gonna mark them for simplicity. So this is our previous day value area high and low, and we'll put the POC somewhere in the middle here. If this is our POC, and if you open below the range, right? Let me copy this again for you guys. So we're on point number 2. If the stock price opens below the value area and then it rallies back inside the value area, so that will look like something like this. So this is the day over right here. This is our previous day data. Now we start a new day, right? And let's say we open here, here, and then you're making a little bit of higher lows. You get another rejection, and then you go inside. So it doesn't mean that it's accepted here. Does everybody understand that? It doesn't mean that you're good to go here. You want it to come back in here, right? And I'm just going to extend this line. So you want it to come back inside the value area low. You want to have at least 3, 5, 10, 15 minutes, depending on what your risk is, candles inside. And then from here to the top, you have 80% chance that it's going to go to the opposite extreme of the value area. So from here to here, 80% chance. If you're a little bit more risk averse, right? And let's say you go from here to the middle, that's also okay. You should trim at the POC. That's your first point target is POC. Second one, ultimate one is the value area high. And same is true when you're trading from the top. You know, you go out, you go here, and then you do a little bit of dance. Well, this is the move. You know, you take profits, it's gonna bounce. It's probably gonna do something like this, and that's your ultimate target. So short here, trim here. You can re-enter on the bottom of the retest of the POC. Once it goes up, down, retest, you can add, take it all the way to value area low.
So Shati, I just want to add a point here. Like in my case, you mentioned that the 3 candles needs to close. I think that is the key, and patience, because as soon as the second candle starts forming, I'll just say, okay, I'm going to lose this trade. I don't want to do it. The implied volatility is increasing. Let me get into the trade. That's where I get wrecked all the time. So those 2 points are very critical for me. Just want to share.
I'll just ask Catching Rock is Catching, do I think of trades as losing and winning?
No.
What do I think of them?
Like losing or winning as far as getting into the trade, or
that's not on my mind, guys. When I get
missing?
into a trade, it's the setup. It's the probability of the setup.
Yeah.
When I look at the trade, my probability of the setup here, there's an 80% chance that I'm going to go to the bottom of this. If you get me out, I'm okay if I lose. I followed every single rule that I have. I got in here, I had the candles close. If it goes against me, that's okay. But if you oversize, you're going to sound like the guy Karthik here. Maybe you're oversizing. Maybe you're afraid to lose money. Maybe you lost a lot of money in the market. Now you have something called like a snake bite. You know, you have a snake in your pocket and you don't want to touch that wallet again because you don't know if you're going to be right or wrong. Well, it's not about right or wrong. It's about high probability setups. Is your setup have an edge over the market? Do you know something that worked before that there's a high chance it's going to work again now? And this is the one that I use. For me, this is the one. There's the 80% chance. So more times than not, I'll take these and I'll play them.
I agree, Shadi. Like my view is on like losing or winning. I think I have to completely go out and see that the setup is working or not. That's all. Just win or lose, take it.
The win or lose is irrelevant. So when you're wrong, right? let's say I go on this trade long here. And majority of the market says, well, okay, we're not going to do that. We're going to go this way. Well, that tells me personally, well, majority of the market was short. Therefore, I lost. But why would I go against majority of the market? If they want to go down, okay, well, you guys go down. I'll just take my low loss and you guys go down. And I'll wait for the next opportunity on my setup based on what I have and see if I can find it, right? My setup indicated to go long. It doesn't mean that I'm wrong. It's just the setup did not work. And the more you put that self win or lose, you're going to lose. It's about probability and trades and setups. Do you have 51? Do you have that 1% edge or not? That's how you should look at it.
I think you should watch that Mark Douglas trading psychology YouTube series that we put in the training. That is exactly what he talked about, and be good to watch.
Yeah. I mean, if you haven't read the book, guys, if you're fairly new, Douglas Trading in the Zones, I highly recommend it.
I've been saying this a lot recently, but if you're having issues like with stop losses and taking profits, like what Shorty's saying, where you plan your trade, you plan your stop loss, you plan your take profit, and if you get scared or greed or whatever somewhere between that, and you take profit early or stop out too late or whatever, you should make two journals, one showing what you actually did and one if you followed your plan. Like if you waited until it made the full 80% move or the full move to the POC, if you took profit before that, if you make a journal that shows like following your actual plan versus what you did, I think after a few weeks or a month, you'll start following your plan instead of letting greed and fear take over during your trade.
So we talked about this. We talked about this. Volume
I have
profiles.
one question.
Mm-hmm.
On the you said a few candles for basically like confirming before you would take the trade. For the 5 minute, I think you said, in 10 minute. I'm usually on the 3 minute. Would the same apply, or should I?
No, I'm usually 95% of the time I'm on 3 minutes.
Okay.
3 minutes has a lot of information. Like it has a lot of rich information about imbalances, liquidity zones. You can gather a lot from here. I mean, just looking in here, I can probably find 2 trades within this chart.
Okay.
So, Shorty, if you take 3 minutes as a base, do you place your stop loss or what are the price targets based on the charts? You will not based
Well,
on
the levels are not set on 3 minutes, right? So when you use value area high and low, we use 30 minutes, right?
Okay.
We use session volume 30 minutes. So when I'm trading, I use 3 minutes for entry. I do pay attention to, like, as you guys know, I'll look at the 15-minute candles and I'll see, what kind of shape they are. Are they some kind of pin bars? Like what is going on? Like for instance, here, this was probably the easiest trade, you could have taken right here. Does anyone know why? Because that's the next topic in the class.
You have a
is a retest.
Downward hammer.
You have something called
It's a spring.
inverted hammer. I don't know about a spring here. It could be a spring on the downside, yeah. But this is a nice pin bar right at the resistance, guys. So if you think about the next steps, right? So does everybody understand all of these here? Point of control, we have the profile high and low. This is your day and high. And then you have the value area high and low. And then here, you have kind of high volume nodes in between here, not this one here. But like here, you would have like a high volume nodes, which are presented like something like this. So let me just grab this, so you guys can see it. Just grabbing random one. So a high volume node is where? So you have your value area high, you have the POC here. So you have a node that's pretty, large right here. This is called a high volume node. What is a low volume node? It's basically where it's low volume. It's just like it sounds, like there's no volume in here. And usually price flies through those quickly once you enter, right? It's almost like a no liquidity zone. You're going to fly through it. And same here, right? If you're able to reclaim that level, there's a high chance you go here, 384. Okay. So that's what this is talking about. So what is this? So the high volume nodes, how you kind of play them, it's like the fair value areas, right? So if you break the high volume node, more likely than not, you're going to be kind of coming back to it for the retest. The low volume nodes, as we call them, skinny bellies, where there's not a lot of volume, there's not a lot of activity being done there. So usually, days like double distribution, usually we'll have a nice little gap in the middle, and those are the best kind of, if it's a ranging day, as it is most of the time. If you notice, we're in a uppercase B shape. It's nice to trade because you know where the gaps are and where we're accelerating through the price. Okay. Volume profile shapes and meanings. So each one of these, means a different thing in volume profile. And I put this image that somebody sent to me a few weeks back that they found it. And it's basically what we have in the PDF format, but with a nice visual, of a trend day, distribution day, typical, extended typical, trading range day, and then the sideways day. So identifying what type of day, and I don't know how many people still do it, and how many became like a second nature. You look at the day and you literally know what kind of day we are having, so you know how you can trade it.
Every day.
Yeah, to me, I just look at it. I see, whether it's a wide balance, and I know it's going to be most likely typical day. If I see that it's sideways, it's really tight, not a lot of follow through on even on the retracements, then, you probably not the best day to trade. Then you have a trading range day, and those are probably the good days, right? For me, they are, because especially when you're in balance, a lot of times, I'm talking about the one here in the middle, you're going top to bottom. And that's as simple as buying the lows, selling the highs. Whether that's value area high or if it's structure, meaning channel, whatever that might be that you're doing, you're just trading the tops and bottoms, and you're expecting responsible buyers and sellers to be active.
Yeah, I've grown to love D-shaped volume profiles.
And some people fit that, and most people lose money on trend days. On these days, most people lose it.
Because they try to
they try to short on the up, they go long on the short.
They try to reverse trade and it doesn't work out.
Yep.
And they keep trying. Even after one loss, they keep trying.
And the worst thing they do is they average down. You were saying something?
No, I said I've definitely fallen victim to doing that.
Oh, we all have.
Oh, what did you say?
I have a question.
Everybody has.
Oh, yeah.
Question is identifying a day, if it's a specifically a range day where trading is in the range, or the or a typical day. You would get to know that only after a period of time, maybe like a couple of hours.
Usually by, I would say, 12:30 to 1, you'll know.
Okay. That's what I want.
Yeah. And at the moment, we open, for instance, let me give you an example. Let's look at this day here.
D-shape.
This is not D-shape. It's D-shape on volume profile, but this is sideways. If you look at this day here, the open is, look how tight this open is, 1%, right? So it's really impossible to trade. It's really hard to trade this. Look at this.
Chop, chop.
It's really hard. Then you have a day like this, where you set a high balance by 12:30 here. You already set a higher range than you did here, and you're not done. So if this is our day here, you already dropped it. If you go off of 12:30, this also could have been a double distribution day. If you look at this, you come in here, then you're trying to create new value here. You popped, You regained it and you closed higher. Then if you look at this day, this is really nice wide balance day, right? So if you look at it, you go from, again, look, 12.15, 2.5%. And if you go back to the chart, look at the typical day. A wide range created in a very short span of time because the wide initial balance, market then gradually trades within the range. So look here, we created a really quick range up and down, and then look, just stay there. Here's a trend day. You're making higher highs, higher lows. You're really not reversing the trend, and boom. And there's another one here. This looks more like a typical day or extended typical. But they're able to close right inside. Okay, does that help?
Yes, thank you.
A quick question on this, the trending days, like
Mhm.
how long is the time frame we need to consider the range? Is it the first 1 hour or first couple of hours? Is there
Yeah,
any?
that's what I was saying. Usually by 12:30, you'll know what type of day you're
Okay.
having.
Okay.
By
Thanks.
12:30, you know, the ranges are set. Usually they open wide. That's why the opening range that we look at the 30 minutes to see if you're breaking the orb high or you're not. If you're breaking orb high and you're staying above it, there's a high chance you're going to have a trending day.
Okay, got it. Thanks, Shadi.
So that's how at least I will use it. Then you look at this. Then we kind of go into the shapes to kind of give you the visuals. These shape volume profiles. So what that means, maybe I delete it somehow. Pretty sure we're gonna have a D shape here. So this one, it's still inside here. It looks like a D shape, but this will definitely be what Catchy Rockets was saying earlier. This is a pure, perfect distribution on on a D shape here. So everybody see it? Let me just delete all of it.
Really quick, Shorty, I'm just curious for you for D shapes, do you like to play the high and take puts? Or do you like to play 50%?
Well, I play both, right? So if I'm taking a short inside the value area high, you know, if I was to grab the high and low of this, right? So if I go high and low with the fibs, so your 50% is very close to this level. And I guess this is the high. So it's very close to it. So I would still use, you know, the POC always inside of it as my profit taking. If I'm shorting on the top, take here, unless we peek through it, right? Like we did here. And they gave you indication. We popped, then you have a tweezer, you know, tweezer top here. Then you have a bearish engulfing here. And once you broke this 50%, it really gave you a high probability you're going to go to the value area low just because you're not able to hold any of this. So yeah, I would say I'll use the 50%, but you know, when it's contracted like this, it's really hard because the range is going to be low.
Yeah. Okay.
And for trading D-shaped or B-shaped, we also use the same logic of 12:15 or 12:30 just for.
Yeah. Yep.
Okay. Thank you.
Yep. So the D shape and how to trade it. So, and this is where we talk, this is what, you know, Catching Rockets was talking about, the 50%. So if you look at this, the 50%, you know, most times they're not, is going to be right on somewhere around here where you're trading that off. And usually in a typical day, when you have typical days, let me see. So somewhere like this, the 50% is pretty important. Does anyone know why? Why would 50% be important on a typical day?
It's a basically a really high chance that it comes to retest the 50% fib if it goes away from it, or kind of like.
And and if you close below it, especially if it's D or lowercase p, for instance, if I was to grab this one, you know, imbalance from here to here, you know, we definitely got a P shape here. And if I grab the fibs, and if you close below the 50%, there's most likely than not a continuation down coming. And if you look here, you know, if this was our initial balance low, IBL as we call it, or IBH, once you break this level, you're going to really, really go down. And look what happened. It acted as support multiple times. There was a spring here. We went to the top. We came back inside this, call it whatever, low of the day or initial balance low. We popped higher. And then once you lost it, look at this. Look at the wicks on the bottom. It looked pretty good, right? And then was indicating, you know, you did not close about 50% on this P shape. And then here, you saw earlier, the 50% also acted nicely here.
Are you talking about like overnight or the next day?
Always the next day.
Okay, so if it closes below the 50%, you can kind of assume, or it's gonna
Assume a
be
trend down.
you're gonna have like a you're gonna close lower, or it's gonna go lower the next day.
That's correct.
Okay.
Yep, that's your continuation, right? Then the P shape. So usually this is, so if you look at this, right, there's a lot of low volume here. That means the price accelerated quickly through it. And then a lot of volume concentrated on top. Why do you guys think the concentration is on the top?
Because of the new value.
They're defending the level.
Well, first, you know, they drove it, let's say from 20 to 40. Now they're going to consolidate. They might be a little exhausted, the buyers, right? They need to slow down. They're going to spend some time in that area. And then some people will also take profits, right?
Yeah, it's going to be an accumulation or a distribution.
Potentially, yes. But whenever you see P shapes, you know, in a healthy bullish trend, usually you play the breaks of a previous POC on a P shape and you keep going higher. When you have a P shape like this instance, right? When you have a high volume node below, if you reject here, where do you buy? On a P shape.
High volume node, the next high volume node.
That's correct. So for instance, I mean, we are not in a bullish market now, so it's kind of hard to give you an example. But if this was a P shape, let me go back maybe in time. Pretty hard. So let's use this one here. What is this? March 18th. Now I have to find how to get there. There's a click.
Just
I don't
turn
know
on
how.
SVP and turn the candles off.
Yeah, that's probably a good idea. Or I'll just find this bastard here. So if you guys look here, we are in a P-shaped profile. The high volume node starts kind of right here, right? Skinny belly here. And now, I mean, the whole thing is the high volume node. And look what happens. You popped here and you bounced from it. And then when you lost it, it acted against you. It's almost like a resistance, right? And then you popped again, you gapped over it, which is telling you that, you know, we're getting a little weaker. And then they bounced again, very close from it here. And then, I mean, the fight over it. And look how many times they gapped over this level just from the one P-shaped profile that we identified. And you can play the high volume nodes retest pretty much all the time when you're in an up market. So you grab it, find it. And then here, when the volume node comes to that level, I guess it never came back. There it goes. Once you pop over it, usually you're going to get a reaction at these levels that we identified. Then when I scroll too far to the right, when you look at P profile shape, you're looking for the next day from the previous day, right? You're comparing the volume nodes from the previous day to play the next day. You can't scroll a day from September or let's say July and look for a bounce here in, you know, September, right? The market doesn't work that way. They don't have that much memory to kind of keep it. They're not going to care about that level so much because there's new market news, there's new traders, new buyers, new sellers. Everything was different. So that's why you only look at the previous day and you compare it. Okay. So any questions on P-shape? Make sure you understand this. I'm not going to read it word by word, but usually when you're uptrend, you're going to see a lot of P-shapes. But when this occurs in the bottom, it can mean a short covering. And I showed you guys, what was it? Maybe from June, how they did it. Basically, if you go back and look at June 16th, around that, look at June 1st to like end of June, you'll see when they started doing the kind of short covering on with using P-shaped profiles. And this usually, when you're in a strong bearish market, like we are now, a lot of bad news globally, these P-shapes on the bottom usually mean short cover rallies. Okay.
Are these data points available on the Discord?
Yeah, they're all available.
Okay, thanks.
How to trade P-shaped volume profile. So that's what I just kind of went live. You have the POC. Usually they're consolidating here. Once they break the POC, you can look for the high volume node and buy there. If you're more aggressive, you can use the same day profiles. But till you get better, I suggest you kind of use the previous day as a reference. Because, Cuban mentioned it. This is really important here. The current day's volume session is not set. Those levels move. So the buyers and sellers did not conclude on those levels. They're still in the progress. Okay. So the B shape, lowercase b shape profile is pretty much, if you think about it, opposite of the P shape. When you're in a downtrend, you're going to see a lot of B shapes. And if a B shape occurs in the top, what does it mean?
Time for a
Opposite
reversal.
of P shape in the bottom.
Yeah, it's going to be a reversal. The last bullet here that I talked about, it's important that you guys remember it. So whenever you see it, just let it kind of flag in your head. If the price closes above the 50% fib of the day's range of the B shape, the trend might not continue. So if we grab this and the trend, let's say, 50% would be somewhere probably around here. We did not close above it. So that means we're more likely going to continue, right? So you would need to break some kind of high volume nodes or value area highs here in order to reverse it. But there's a high probability you're going to continue down if you close below 50% on the lowercase b.
And vice versa, right?
Correct. But on P shape, it becomes more of a 61.8 for me play than anything else.
Gotcha.
I use 61.8 more in a P shape than I need to be. That's just my risk preference, though.
Are you able to just, I can add it myself, but would that maybe be something you could add in the PowerPoint? If it closes below or above 50, just kind of what to expect. It's just a suggestion.
Like this here?
Yeah, I'm on my mobile right now, so.
Yeah, I have it in a PowerPoint.
Okay.
It says bullet items in a PowerPoint. So you guys, I highlighted it here for you guys.
Okay, thanks.
Yep. And then how to trade the B shape here, it kind of explains the same way. If you're in a B shape volume profile and your POC is on the bottom and you come to a volume cluster, aka high volume node, you come up here on a retest of that node, there's a high chance you can short it and be successful with the trade. Okay. Double or big B, not double B, is your double distribution day. This is one of my favorite days to trade whenever just because we spent so much time in the range. I found this one to be my preference, right? Especially this and the range day when you have this, it makes it so easy to trade because you short the tops, you can put your stop losses slightly above, use the 50% as a target, or the high volume or low volume nodes. And you're able to kind of just bounce in between these levels and just trade it. It's almost like having 3 channels, right? It would look like something like this, right? You have a high volume node here, then you have a little bit of a shelf here, and then you just kind of play in that area. You short below on the retest, you can go short here. If it goes up and then dips, weakness is there, you short it, drive it to the bottom, and just play the levels in between. And then here's how to trade it. So I give you the examples, you guys can go through it. It's, once you see it, once you experience it, once you try this stuff, it's not going to happen like, hey, overnight, man, I'm successful volume profile trader. It took me years to figure it out. So don't put any expectations on yourself that you're gonna come in here, you're gonna, oh, I read the PowerPoint and it doesn't click to me. If that's your expectations, then
It takes a while, man.
how long does it take you to become a doctor and make $500,000 a year? You know, you're not gonna come into trading, learn something totally new, and become proficient in it to make a lot of money, right? And you hear a lot of traders, they've had their ups and downs, but they just continued, right? So don't get discouraged if something doesn't work. That's why it's key that you journal, and that's why it's required that you journal to learn from your mistakes. Let them be lessons, not like, you know, losers for you and, you know, doubting yourself. Okay. One of the setups that we do in support resistance is this. And you know, this is, I believe this was SPY or Qs that I charted for you guys. You see the beautiful support. You see 2 taps here, then you break below it. And as you guys know, I do not short initial moves down. I wait for the retest. And this happens on what time frames?
All of them.
On all of them. And that's the beauty of trading, right? I mean, it just depends who you are. If you want to trade, you're like, I'm a 30-minute trader and I want to use 30-minute channels and this whatnot. Yeah, just use 30 minutes. I mean, it's simple as that. You know, here's your channel here. You have a low here. Okay, well, here we broke below it, right? And we had a little spring here. Did we ever retest this level? 381? Well, we never came back. Then you had a little bit of action here from this bottom. Sorry, I'm not lining them up perfectly. And then you see here, you had this level, and now you're able to see it. And maybe it looks better on 65 minutes. You just have to play with the levels and see which one gives you kind of like a crystal clear channel that you're in. And we call this, and from the Wyckoff theory, right? You can have the range top, range bottom. We coin the term SSL high, structure high here. It would be this, and then of these two, this is your structure low, right? And then here, of course, if you guys are familiar with it, this would be the spring, not this one, but this one. This one here would be the spring. And you learn how to play this, right? Not everyone is born to know how to play this. So if you look at this, I'm pretty sure a lot of people in this room, on this call, would know every single entry here on how to play this right now, and ask them if they knew it 2 months ago.
Shot.
There's at least 3 setups that you could have played here. But you will recognize it with time. It's not going to happen overnight. Okay, so support resistance. This is something you should really, really pay attention to. Old support becomes resistance. Those are really good short levels. One way to confirm this is to actually look at the volume profile from here. You know, whether it's to here now or whatever you want to look at, you can grab the bottom and see what does it tell you. So in the case I did here, I grabbed the consolidation POC to see where are these levels and points, inflection points of this consolidation, where are they? So we consolidated here for some time, and you see this POC was pretty good. It acted as support multiple times here. I'll just put the level and delete it. So you see this level here. It came back, acted as support. I mean, multiple times here. Break below, retest, go to the low, go above it, retest, and then it never made it to the highs. Here we had a spike. I don't know when it was, 21st. And then we had the sell-off right from this SSL high, and you know, obviously the rest is the history. And the same can be said in here. You know, you have another channel, and remember, we spend a lot of time in balance, so it's important that you understand this. You have a lot of imbalance here. You know, you have some liquidity hits here. If you use any naked trading, you will understand that some of these right here that are happening, they're liquidity hits. And they're trying to get the stop loss right here from the people and, you know, cause the liquidity. And same in here, you know, you have another. If you're naked trading, you have another level here that was important. Let's see. A rejection, broke above it, and now any retest of this is going to be dangerous at 370. It's going to be a really, really good short. And what I was trying to tell you, if I didn't deviate from the topic, when you look at this POC, if I look at this here, I'm able to focus on this alone and know how to trade it just based on what I'm seeing here. How many trades does anyone see here? Even though it's super tight, how many trades do you guys see here?
Definitely 3. Or
there's one here.
Mhm.
There's another one here. And there's, third tap there. There's, once you break the value area low, you regain it, you go long. And that one. Here, this one was a tricky one to catch, right? Most of you probably would not catch it unless you shorted the top. Otherwise, here, they didn't give you an opportunity to even catch the break of value area high. But they give you clues that they broke inside the value area high and that this could be used as a trap. Okay, so once you set up and you learn these behaviors of the stocks and how they move between these levels, it becomes critical. But knowing this and identifying what was support, now is resistance, is going to be crucial. Okay, so now same thing on the bullish side, right? So you have something that was support here, it was resistance here, you go over it. This is your really good long opportunity. And just a kind of like a mental note for you guys, if you never traded channels like this, just remember 90% of the time we are in some kind of range. So here, if you look what I did, I gave you the percentages the range is in for this particular chart. So it was in the range between 98 and 108. So that's a $10 move. So what you do is to find the target is you find the top and you take the same range to the top side. So you see the 10, I tried to make it 1038%. And that would be your first target to exit, right? So if you're playing 0 DTs, that's probably not the best depending on your time frame. But a measured move is the channel. So if I was to measure, where was this one? If I was to measure this move right here, right, from the top to bottom, 2% here for Apple, right? So I go from here. So Apple somewhere around here is probably going to get a bounce because it'll be the equivalent. It'll be symmetry of the channel all the way down here. And that's what I'm trying to explain in this chart, along with the flip of resistance to support. So R to S flip here. There's resistance, you broke above it, support, target's there. Does this make sense?
Yep.
Okay. About the pin bar, so earlier we mentioned it. We were kind of waiting to get there. You had a nice pin bar that we had circled here. And if you look at this PowerPoint and just kind of learn to kind of look for them, train your eye to see them. And it's the same concept here. You see a bearish pin bar, you have a long tail, the body here. So it's a good pin bar to take. A lot of people will take that below the break of this. And sometimes you put your stop loss right above it, right? But you could use volume profile and use the shelves to protect you from the stop losses and use those to determine the stop loss, right? But this, if you can kind of understand what happened here. So you had, a nice channel, then you flip the support into resistance and you have a nice pin bar. So if you're a really, aggressive or risk averse trader, then you can go short right below this level right here. Opportunity lost is 140 to, 34 cents. And then your risk management wise gets a little bit more complex here versus if you took the trade here. You get a little bit more reward from this section here.
There's also that fair value gap.
This one here? Or the
To
bottom?
the left of it. No, I'm just saying, like, it went up into that fair value gap to the left of it.
Oh, yeah.
Like, right to the left.
Well, I think you're talking about here.
No. Just that, like, straight down candle, slightly to the left of that pin bar, over to the right more.
Here? Oh, okay. You're talking about the tiny one here?
No, to the left, that black one, that big black one there.
This?
Yeah, isn't that a fair value gap going down?
Yeah, there is. They left it behind, correct?
Yeah.
They left this one. There's a lot of them here, obviously. You see them, there's some that I pointed out. You have this one here. There's a ton, right? Because this is the imbalance. Excuse me, man. I'm getting so congested. Okay, so that's the pin bars. You want to keep an eye for them. There's a whole dynamics on, if you read the Pivot Boss, the guy literally breaks down the ratios of the pin bars of the body and what you should look for. You don't have to be so precise to trade the pin bars. I'm not going to stop, take a measuring tool out, body versus the whole candle and take the percentages. You really don't have time to do that. But once you get trained, your eye will recognize if that body matches the proportions, what it should look like. So this is straight from the Dale book. I do recommend you guys buy it and read the book. You look at the pin bar here, you drive away from it, whether you want to call it fair value gap above it here, you come back right to it and you short it. So you created an imbalance here and, maybe the orders were left here. Once you drive back, those orders will get filled and you're going to drive again. So this is probably one of my favorite setups.
Are pin bars generally market orders though?
I would say yes. I would say 90% of the time because it takes aggressiveness to drive the price opposite way.
Yeah.
I would say 90% of the time, yes, unless you hit a really level, where they had the passive people sitting and waiting, then you can drive that, right? You can make it because people that are shorting it, they're driving it into that passive pool, if you want to call it, the demand. So they can trigger, right? Because those passive limit orders will be executed as market orders once the price reaches. So yeah, I would say majority of it's market. Good question. Okay, so volume accumulation setup, guys. This is your bread and butter. This is one of my favorite things to do on volume profile. And it basically involves you looking at, high and lows, low and high, swing lows. So if I look at this, for instance, let's say tomorrow, I'm looking to see where I want to short SPY. Well, I know, there's an imbalance started here. We started selling off. We had a nice little candle. Well, if we're able to come anywhere to this POC tomorrow, call it 359 to 360 range, there's a high chance that we're going to be rejecting. And then, something that we know also just from being traders is what about the 360 level?
It's going to be a psychological level as well.
Psychological level.
3,600.
Well, 360 on SPY. Right?
Shorty, could that be a psychological level of all stocks?
Yes, always is. The round numbers are always there.
Round numbers, yeah. Okay.
So here's your, you look at the previous low that we had is the 359.70, and kind of is the same spot where I would probably stop my I would probably grab this whole thing here just because the value area low is so close to the POC. But this would be kind of like the rejection that I'm waiting for. If we're able to reclaim this level, right, and go inside, well then, my idea of shorting the market changes, right? Along with knowing where the PD POC was, it might shift my behavior to lean more towards a bounce or a quick reversal somewhere. And that's what this would help me identify, right? So if I know where the PD POC is, which is kind of right here at 361.97, and I know value area high. So for me, tomorrow, if you want to give me any sentiment of a bullish side, what needs to happen?
Price needs to go.
You need to reclaim
above
value area.
value area low.
First, you need to reclaim the value area low from the prior day. That's correct. And if you're able to reclaim the value area low, it's unexplored area right now. But you set up for what? I'm giving you a summary of everything you learned so far.
80% rule on the retest.
Correct. You will have 80% rule here to POC, go above, you will get here. If you break the POC on a retest, there's really like 96%, 95% chance you're going to go to value area high. So from here to here is 80. Once you break the POC, your odds become a little bit better. Then, if you reclaim this, let's say we open above it, right? Let's say we open above the value area high, which is 362. And then you continue higher and you hit, let's say, this POC, and you come back to this level here. What would you guys do here?
Go long, as that's a retest.
That would be a pretty good level to go long. It would be a nice level, and it doesn't mean you stay long to 369. You're going to get your 25, 30% on the option off the bounds, and you take it and go. If you take 3 times 30%, you almost made 100%.
That's also a good area to, I mean, once it reaches the top up there, you could short it, right?
Well, I don't know. I don't know if I can short it because this is a POC. This is a VPOC. Yes, this would be a good level to short it. But my ideal level for shorting would be, if we did this jumbo mambo here and we broke below it and then did this.
Gotcha. Retest and then down.
This would show me the sign of weakness that, hey, you went above, you got rejected, you dip
Gotcha.
below, you come back for retest. This is my sign of, shorting here.
Yeah, confirmation. Yeah.
And same thing on the low side, right? If we go above it, let's say, if we break above this value area high tomorrow, and you go here, and this is let's say this is your value area high. If you dip it, you don't short on the first one, you short on the retest, right? Then you're in an 80% rule to the downside. That's only if we gap up or push the price up, then you wait for the rejection there, and you'll be 80% to the downside rule. And then you would, if the POC is so close like it is here, I always tell you guys, make a judgment, right? You have $1.12 here. You can play that, but you have to be really aware when to take profits. And then another way is that, if you break this, then you can drive it here with a little bit of a higher probability than 80%. Okay, maybe not. Okay, so I just kind of covered some of the aspects that we just talked about, right? We covered the 80% rule, the flipping of the zone, support to resistance, resistance to support. And now the volume accumulation setup, which is fairly easy, right? So if you look at the volume accumulation setup, I'll show you something on, like, for instance, 3-day. So here, what my naked eye sometimes sees here is that we had a support here. We had a support there as well, and now we kind of busted through that support, which was a fairly big support. To me, it looked like, and I showed you guys, like an inverted cup and handle. I'm not too big in patterns, but it does look like it, right? You have a cup, you have a nice handle, and if this was to break down and go all the way, I mean, you have another 24% drop coming on S&P 500. So you're looking somewhere around 270s in SPY. That's just this. But now if I wanted to look at, for instance, well, you've been consolidating here for some time. Let me look at it. Well, market was in balance till we broke, when we broke 400, call it 438, you entered an imbalance from December of 2020. And you just broke that, right? And then you also happened to break 2021 value area low. So for me, in order to, let's say if I wanted to short this, right? If I wanted to find a really nice swing short, for instance, all you have to do is I'm looking where majority of the volume was accumulated. In this case, on the big swing here, I have 2 swings. It was here, but most recent one, if I was to go here, look at that. So you have the value area high that they were not able to break and a perfect rejection. And then you have POC, which is the one where we shorted too, if you remember, 411. So we broke the POC up, and it's the same concept I gave you on smaller time frame. You broke the POC up, right? You did this, you broke the POC up. Did I just give you the same identical setup, Cuban? Said, I don't short this, I will short it when it comes back.
Yeah.
And then, your value area low becomes first target, and then of course we will figure stuff out, how to find the other targets, but that would be it. And that's exactly the volume accumulation setup is. You broke above it and you want to short it on a retest from the bottom. And that's where you look at the short entry. And this is the best entry you can have. Because it's already rejected. Now it's accepting the rejectance here and you continue down. That's pretty much your goal.
Accepting the rejection and you short it right from POC down.
That's correct. And that's our volume setup, identical. Because majority of the volume, people that went short were here. Right? You guys agree?
Yeah.
So now, if you're able to reclaim that level, that's good. But if you fail to accept the price and you come back, excuse me, that's a good sign to short because it's showing weakness. And what are these short sellers doing here? If you're super short here and you bring the price back to that level, what are you guys gonna do?
Accumulate more to short some more.
Yeah, you're gonna protect your short.
Yeah.
And here, and markets are manipulated, far from it. So here they, set up a nice little trap. They're going higher. Everyone I think was aware of the 430 level that I've ever seen first time. Everybody was aware of it, but people were skeptical. They were like, man, we're going to go higher. We're going to go all-time highs, right? They did not understand the situation that we're in, as a global economy, that it's really, really bad.
Yeah, a lot of people got burned on those calls.
I wish I could say the same, but no. So the volume accumulation setup is the same concept. You find that if you're looking for where to short, you look for where the sellers were on the previous down run from top to the bottom. And if you want to know where the buyers are, you just do the opposite, right? If I wanted to know where potential bounces could have happened due to this recent run here, well, this is it. This is where they could have bounced. And if you look here, they tried to bounce it. And we lost it. And if we ever come back to this level, it's going to be a big level as well. Even though it was buying, but it was a critical pivot point for them. So there's potential that you're going to find some sellers. And then same here. If you wanted to grab most recent one, you could go to the bottom here. Here's this level. If you go stop at this level where it was initially, then they can bring it back to 375. And that would be a really good short and it matches this level. So if they ever want to run it up, 375 would be an ideal level to short it. And I showed you guys this before. Usually you get retracements, you don't ever just go down. So here you dumped, like what, 12%, and then you're able to climb back up 8%. And then from this one, I'm doing it quickly. You drop 17 and you're retracing like 9. Well, now let's see. You dropped 17, very close to the previous dump. Well, maybe this one's deceiving a little bit. So now let's see what happens, right? I mean, maybe we bounce, maybe we're not. We'll see it. We'll look at the levels and see what it tells us, right? I mean, short earlier, there's a little bit more room downside before bounce. Okay. So volume accumulation is basically the highest volume traded on the short side when they were selling or buying, and you wait for the retest. And that happens, guys. It happens so much. I'm telling you, one of the most guaranteed, setups that you can play. You just have to look for it, and it happens on any time frame. If you're using weekly, that's mainly meant for swings. So if I was to look at, for instance, this one from COVID lows to, let's say, all-time high here, I'm able to quickly see where the levels are and where we are headed. So this level is going to be crucial here at 351. We're not really too far from it, and psychologically, the retail is going to be all over that level. At 350, we broke this level where we entered the skinny belly area. You guys see that? And then you have a little bit of shelves. I would probably mark this one here, which was 358. You have this one here, 356, and you're going to get a rejection or a bounce on every one of these. because these are higher time frame shelves. And now when you look at it, you have day trading levels where you can expect you break this, retest, go down, and so forth. But this value area low is going to be really, really, really important. The 332, and I think that was our target based on the clouds. It was the quarterly mid, right around there. Okay. Any questions on volume accumulation setup?
No, thank you. No.
Okay.
No questions for me.
So far we covered 80%. We talked about balance accumulation and balance and the channels, hold support, resistance, and then of course in here, when I say accumulation, that's your volume accumulation, where you accumulate, you pop from it, and you will eventually come back to it. It depends what time frame you play, but that's the idea behind it. Value areas and scenarios. So this is where I suggest, I can go through every single one of these. I can probably go in my sleep and know these levels. If you go through these and you try to find them on a chart, and if you don't understand something, then you ask questions, you're going to learn more than me telling you what I would do here. And that's just me knowing how the market's going to teach you. You have to find real life examples, whether you're trading lightly, find some cheap stock that you can look at, or there's, you could trade cruise lines, the Delta. They have a lot of cheap contracts, guys. And you can apply these principles for like a $4 training, meaning you lose $5, $10. That's okay if you lose $5, $10. You're not worried about money at the moment. Right now, the key for you is what?
Learn the
Knowledge.
Setups.
Guys, the
Learn.
setup, learn the process. Once you learn the process, it's easier to repeat the money. I don't know, who's on, who's not, but Bean, when he came in, he wasn't, consistently green. He applied some, principles that we teach here, and he's more green than red now. And when he's red, are you guys shocked when you see him red?
No, everyone, they don't always work every setup.
Yeah, there's things that are not going to work. There's few other traders that I trust them with their levels now. When I ask them for charts, I don't ask them because I don't trust them. I trust them because I look at their charts and I can freely trade off of their charts. And for me to gain that trust takes a lot. So it's a big deal for you guys to look at it, and the value area examples here that we can go through if you guys like. And it's the same one that I just explained a few moments ago. You pop above the value area high, you come back, your retest is here. This is your pretty much the 80% rule. It got rejected. And now here, if you get in, you put a stop loss right above, you did your deed of doing the due diligence and the perfect setup. That's one. Then you have another one where you have the acceptance of the new value area. You break above the new value area high, you come back. This is your 1, 2. You let it develop. 2, you go and you put your stop loss right below, depending, the shelves or whatnot. But this is where your stop loss would be. This is one that we just covered on SPY. Did we talk about this one moments ago?
Yeah.
I think Rumi, you're talking with me on this one.
Yeah.
Yep, it's the same exact, and they just repeat, guys. And the best part about, what I'm trying to teach you is that you don't have a lot. Once you learn the rules of the value areas and the POCs and the regains, this is it. This is all you have to do. The biggest thing you have to do is wait.
That was going to be my question. There's so many like indicators and all that stuff out there. Like, so this is enough. This is all that we have to learn.
This is all you have to do.
Yeah.
And it becomes a waiting game. Like the other day, I think I was at a doctor's. I came back, and it happens that we are coming back to a super nice bear setup at 245. They were going to retest the POC, basically a sell-off POC. If I was to give you a visual, I forgot the time frames that we were on or what day it was, but so if you look this, it was something like this, for instance, and they're coming back, driving it back to that POC, and I said, hey, we're going to get in here at 3.35, and we're going to sell it at 7.8, and we just waited. We got our fills on the contracts at 3.5, and we sold them at, I believe, 7.88, almost 100% on the contracts. It was just a nice setup.
Yeah.
We waited, and they executed. And just so you guys know, the new guys, I do chart option contracts. When I look at the option contracts, like for SPX buy, I look at the contract and I have the orbs on the contract itself. If they're hitting orb low, and let's say if the put is hitting an orb low and the price action is hitting a sell-off POC, to me, that's one of my favorite setup in place. And that's exactly what happened on the one that we took. The contract was going to orb low and there was a lot of demand on that contract, but also the price was hitting a supply. So it was agreeing. For me, it was a pretty much a easy play, just knowing those two things. So if you're not familiar with charting contracts, I'll show you guys live maybe tomorrow or one of the days this week, and you guys will be able to see it, how they respect the levels as well.
That would be amazing.
Yeah, that'd be great.
Yep. So this is the drop, and I give you examples every one of these. I give you some, tricky questions here. Where would you trade it? Not all of like this one is not straightforward. I want to see how you guys will go about it. And then I'll give you the volume accumulation bullish example, right? What I just mentioned is one of my favorites. Does anyone remember what this was? This was the Oxy trade that we took swings, right? This was a major POC retest when it came back. I wanted it at 52 to see if they would defend the gap on the bottom. They were not going to give us, and we got here right on the POC. And I think my highest sell was 70% on Oxy. And I'm pretty sure if the news stand as they're coming out right now, this is going to go through the value area high tomorrow. And then same thing on the bear side, right? So here's your, just think about this. This is your SPY. You drop here. I grabbed the POC from here to here. We go to the value area high, then you bounce off the POC, which is expected, right? You bounce it. You don't short this guy. You short the retest of it, right? So you broke, you got rejected, you dip inside, and when you come back, this is a really good short opportunity, and you can take it to the value area low. And that would have been nice, what, like 20 something points, even more, 30 something points from here to the bottom. And that's where you will close it. And then you will look for new entries.
I remember that day on September 13 when you wrote on Twitter, when the whole retail is thinking CPI will be down, that's not going to happen.
No, yeah. And I mean, I'm telling you, so many people got burnt. The PCC, the put to call ratio was so off. Everybody was expecting the break of 430. I was just,
I remember that.
I was laughing because I felt bad that they were going to lose a lot of money, and they did. So here's a bearish example, like finding an imbalance and grabbing it. So here was a point A, point B. This was our POC. Remember, we broke this here. And look, when we came back, what did we do? A really nice candle all the way to the bottom. So your structure low, if you guys see it, would be right there. That's where you want to take profits. And you could probably use some fibs and figure out this would be a 61.8. And then here's your broken high and low. This is where you incorporate, one of the setups that I mentioned here, where you have old support, new resistance, so high and low. Where you look at the resistances, right? And you see this resistance here just from a naked trading chart, right? It acted as support, but then it also happens to be the value area low of the volume profile. So that should give you confirmation. If this was a POC right here, this becomes a no-brainer. Once you come up to this level, it's going to be probably more likely an easy short. You can get 40%. Remember, you're playing crumbs with the guys. You're not going to get rich on one trade. It's going to take a lot of trades over and over to compound, and then you build net worth. You don't want to be rich. You want to have net worth that's powerful. Rich people lose money. People that are wealthy, they keep it. Okay, so this is just a simple example. You have the resistance line, and now the value area low is giving you another confluence item to go short. Okay. 80% rule. Does everybody understand 80% rule? I mean, I explained it.
Nope.
Who said no?
Josh did. Dude, that thing always confuses me.
Okay, Josh, you're gonna explain it.
Oh, what? I just told you I was confused by that. How am I supposed to explain what that means?
Well, You're gonna explain what you know.
Oh boy, this is gonna be a tough one. All right.
Come on, buddy.
Here's all you
Give me
need.
a bit.
Okay, well, this one maybe didn't execute it. Let me look his bio.
Yeah, I don't
His
think so
bio
there.
did.
We just don't.
Like your internet drops.
Yeah, I think my internet's a little slow. I don't think I can read this right now.
There you go, Josh, right there, buddy.
That's all you need right here.
Cuban.
Come on, bro. You can do it.
No, I know I can, man. Just this is literally like you go back and chat. I'm always asking, "What's 80% rule again?" But this is good though. I need this.
All right, so here's your PDPOC. We're just gonna. Josh's gonna teach us the lesson.
Oh boy.
There you go. Here, Josh, this is a new day right here. Now tell us.
So wouldn't you wait for it to go down to the PD VAL and then wait for it to reject the POC? Would that be 80%?
It
See, look,
depends.
bro, I have no idea about 80% rule.
I want you to take notes and send me a picture of your notes after this.
All right. It's in writing though, because it's in like an actual notebook. So.
Okay, good. Just take a
Right,
picture.
like a 16-year-old just.
Okay, so we break above the value area high. If we go here, and then we get inside the previous day value area high. The previous day value area high is this right here. I'm sorry, the previous value is here. This is the high, this is the low of that value. Once we get in, if we open above it or we surge, let's say we open here and then we go here. Well, now, if you get back inside of the value area, like you are here, you're waiting for 3 5-minute candles, 10, 15, depending on what your risk is and what candles you trade in. Usually I do 5 or 3, but that's just the confidence I have in it. Once you have 3-minute candles inside of it, you get a go ahead to take the short, and there's 80% chance you're going to go to here. This is taking a short.
But I had no clue. Thank you for explaining that.
So this is a short scenario, 80% rule. Now you're going to cover the bullish one. How do you play the 80% bullish one?
Would you wait for it to retest the previous day value area low?
Yeah, so we would, if it goes down below, and let's say then they pop it inside, this is where you go. You wait for the 3-minute candles to do this, and then you take a chance, 80% chance, and you take it from here to here.
Shorty, when you say the 3-minute candles means that because you're trading in 3 minutes, is that correct?
That's me, correct. But you can use 5 or 10.
Minutes, if you're trading in 5 minutes, then
you wait for 3 5-minute candles.
Gotcha.
But then it is all about consecutive 15 minutes. Is that right, Shorty?
That's correct.
15. Thank you.
So you wait for 3 candles? Is that basically what I heard?
That's correct. You want to see 3 candles inside of it. Close here.
Okay. All right. Thanks.
Yeah, I see that.
I thought if you opened above or below and you broke into the value area, you did not need a full 15 minutes with a retest. Is that incorrect?
I would say it's incorrect. You want them to establish that they're accepting the value. That's the only reason why you wait. Because you don't want to get in here. You want the buyers to confirm the price. You want them to come in. Let's say we open below it in this case. We open below it. Well, if you go in here, how do you know that this value is not going to be rejected immediately from here? If you go in here
on the retest.
On a retest, you can go here. Yeah, that's
But
it's
you
a
need 3
viable
points,
setup.
guys.
But here, if you get in, you can count this candle as when you get in as a candle. If this candle stays inside and it doesn't dip below, it's a candle inside, right? It closed inside. Then the second candle here, third here, and then you have a chance. Even if that candle is higher than the previous one, take it. That's your chance here. You can put your stop loss right below it.
Okay, I guess I would look. I'm a little. If that broke inside and the second candle bounced and supported and started moving up, I would go in.
You can go in.
That's just how I would do it.
And I've done it before as well. For the purposes of teaching people more risk, teach yourself to first preserve the risk. As you gain more confidence and you look through your journal and you see the setups, hey, I didn't wait 3-minute candles to close and I got in. Well, maybe it's going to teach you to be like, okay, well, maybe I should wait. Maybe more times than not, it happened that I should have waited and it would have worked out, or it didn't work out. That's why I say at first you want them to establish value. And that's why I say that you want to wait at least 3 minutes, whether it's 5, 10, 15. Professional traders that scalp, with 200K or 500K, they will wait 15 minutes, 315 candles inside value area.
Shorty, for the short position, you go retest of the previous day value area high, and you want to bounce 3 times between the POC. Is that what you said?
No. You just want to stay inside the value area. You want to be inside the value area here.
Okay.
And then there's 80% chance to the bottom.
Okay.
So does it matter where that third candle is inside the value area? Like, do you have to retest, or no matter where it is, you just take it?
No, you take it. And you heard, Bean, his preference is when you come back here and you retest this, that he takes it here. And that's okay, because if there's 2 candles that happen to be, let's say 3 5-minute candles here, and the third one touches value area low, that's a pretty good setup, right? Because you're coming, you have 3 candles, and this one comes here, taps it. Not a bad risk to reward. And I do that a lot. And you guys hear me, I'm gonna go long on or short on a retest of these levels. Sometimes I don't wait. As you gain confidence, you can do that. At first, you should wait, let it set up the value so you can start trusting it. If you get played out too many times where you go here on the first retest, what are you going to say? Oh man, this 80% rule doesn't work 80% of the time.
That's right.
So you don't want to kill your confidence in a setup. You want to start believing this setup. The more you trust it, the more market's going to trust you as well.
Yeah, I was going to ask you, could it ever be a situation where it rejects from the prayer day value area low and go down?
Yeah, of course. I mean, it's market. I mean, there's no guarantees that it
Yeah.
won't do it. That's why you have what to protect.
Stop loss.
Stop loss.
Stop loss.
If you don't have it, then you don't believe in your setups. That's a simply, before you set up a trade, you should know where you're going to get out. Not where you're going to take profit, but where you're going to get out. Because this is about preserving capital and compounding. It's not about getting rich overnight.
Stop loss is normally like percentage in this way, or in this case, or normally on a particular level.
I usually, I'm 99% of the time based on the level.
Level. Okay, thank you.
Yeah. So if there was a volume shelf, for instance, I'm just going to give you an illustration if I can. If there was let's say a shelf here, a big shelf here, just think about it here. I will put my stop loss somewhere right below that shelf. Why? Well, I want these guys that are defending their long position to be exhausted first if they're going to hit me. I'll be hiding behind the big boys right below it. I'll let them drive the price up for me, but I'll just be sitting in the back and watching. And if they break it, then I know the big boys lost. That means I should lose too, right? That the probable setup is no longer probable.
Yeah.
Correct.
Yeah.
Are there is there a recent stock that has done the 80% rule you could show as an example?
Yeah, I just did.
Oh, I must have missed it. Was it before that example? Because I just hopped on right before you had asked me.
Right here.
Okay. Oh, now I just got to screenshot it so I can see for myself.
Let's
So
spy.
the SPY, if you look at the sessions, we
SPS
opened the day.
was the same, right?
We broke the PD value area high. We dipped back inside. You came back for a retest, and this is where Bean and I would get in 95% of the time. I would get in on this short because it's giving you candles also, right? And
Wow.
aware of it, and there's your 80%. Yeah.
Yeah, that's kind of crazy. All right, thank you. I appreciate that.
SPS is the same, right, Shorty?
I don't trade SPX guys on volume. You should know that by now. I don't look at SPX on SVP. I don't care for it much because it's aggregated volume. It's calculated based of SPY. This is a derivative of SPY. So I don't, many times I don't have levels for SPX.
But I'm asking if you were trading SPX.
I use ES to trade
Oh,
SPX.
okay.
Yep.
So will you recommend the same for SPY as well?
No, I chart SPY. I chart SPY, but I always keep an eye on ES when I'm trading SPY or SPX. ES is far more liquid than SPY or SPX combined.
Hey, Shorty, what do you recommend using like bond profile for other stocks like AMD per se?
What about it?
Like, do you think it could be a good ticker to like practice as well?
Oh yeah, they have fairly cheap contracts. They're always
Yeah,
about
that's what I was
$100 or $80. So yeah, this is a good one. Depending on your portfolio. If your portfolio is 400, then AMD is expensive, right?
Yep.
And AMD had also a couple of nice. I mean, here's your AMD 80% too.
Yeah, I was back testing and I seen like it worked pretty good for AMD.
Yeah, and the less stocks you trade, the better you get. So here's your AMD. I mean, you went in. Look what you did here. You went all the way to the POC. Remember, POC is not a single line. I'll keep repeating that so you guys get it. For me, this would be the range. And look at this. You went above. And what do I usually do on retest when you break a PD POC? I go long. And look at this. You had a double top failed auction here. And then you came back to resolve the auction here.
So, like you said earlier, it's just better to take profits at that level. Like if you don't want to take the bounce, right? Just wait for it to come retest or break the POC, retest it, and then short it again.
Exactly. And this is exactly what happened here. It went, broke it, came back for a retest, and then poop all the way to value area low. When you get this break and a retest, I'm telling you guys, calculated back test, there's about 95% chance you're going to go to value area low. If 80% is from here to here, guys, this retest here, this POC is a lot more than 80. Does that make sense?
Yes.
Yeah.
Okay. Okay. So
Sorry,
80%.
Shorty. Can I check like how you estimate or anticipate that the price, like right now is 140 for that contracts, but you can anticipate that it can drop to $1, then you will pick it up at
Well,
the
you
point of time.
just look at the delta, right, of the contract, right? Whatever the delta, if you're shorting, it'll be negative. And if you're long, it'll be positive. You look at that for every dollar moves, like how much is the contract going to appreciate? And at the same time, like I said, I chart the contract itself. If I know, in this case, for instance, right, if I was looking at AMD this day, if I was looking at AMD, so this sell-off here is really, I guess, kind of bad, just because of the gap down. So let me kind of give you the basic of it. So if I was looking at AMD here, you know, the structure low was somewhere around here. And we break that, right? So for me, when I'm looking at the contract, let's say a put, $62 put, is approaching orb low. The contract itself is at orb low, and we are reaching a point of resistance, right? So you could figure it out many ways, you know, where is it gonna short? Here's your 50%. It's hitting the 50% with an indecision candle. There's a really high chance and a probable bounce on the contract that's at orb low and a price that's hitting this resistance point. So for me, right, at 65.87, probably a high chance you're going to at least go to the middle of this run that you just had. If I look for the middle of your run, well, let me go from the bottom. There's a high chance you're going to go to the 50% from this one. And look. So it's just about probabilities that I look at probabilities more so than anything else. You came here, contract at a low, you're hitting resistance. I'll take you at 50% if I'm using fibs for it. And 50% hit, 61.8 hit. Well, now we got 61.97. And then my ultimate target of 60 to buy shares.
Shorty, do you use forming POCs or values at a certain time of day, or do you just ignore those till the next day?
I ignore them. So, and there's a cool trick you can use. And I didn't want to get into it. This is more advanced once you guys. So if you look at developing POC here, let me just mark it differently. There's a trick you can use with developing POC, but I didn't want to add it just yet. Maybe once we get a little bit more confirmation for you guys that you can see something here. So what do you guys notice about developing POC here from here onwards? It dropped.
Is the orange line the developing POC, or is that your trend line?
That's my developing POC.
Oh,
Orange.
okay.
We could never really close above it for a long time.
Yeah, but here there was a drastic drop that we hit the VPOC on as well, right? This is our VPOC, correct? I guarantee you, and you can record me. I don't care whatever you do. We're gonna be here very soon on AMD, and this is a short opportunity on AMD. That's
Is there a time
so first of all,
for last 30 minutes?
I'm sorry?
Is there a time that for last 30 days or 60 days till that VPOC is valid?
Well, this one just occurred a couple of days back. So usually 30 days is the memory that we go for VPOCs. And once you start breaking them, like for instance, you know, you have a VPOC here, you have a VPOC here. Does everybody understand what a naked POC is, virgin POC is that I'm explaining here? Anyone confused? Rafa, what is it?
Because it hasn't been physical yet.
It's a point of control when it breaks and then it never comes back to retest it.
Good job, yes.
So
So
it's a bigger magnet.
These are 10 times stronger than the regular POCs, guys. So there's a high chance. So if you look at this, and if I just grab POC or fixed volume profile from here to here, watch now. I'm just gonna hide the daily. What do you notice here? Is this POC matching literally the VPOC here?
Yeah.
Almost to a penny. So in the PowerPoint, I gave you an example as well on some of this, what I'm just talking about. So the 80% rule is explained in there, a lot of notes. Here's this, what I'm talking about. Balance to imbalance, which is pretty much what I just explained to you. Balance to imbalance, right? Here's your balance, here's your imbalance. Now, if you go to PowerPoint, using value area low, retest to go short. So you can go and retest of the value area low. Once you go to the POC, you let it drop, come back for value area low. So it's a 1-2 setup and you short a value area low. Similar setup that you can trade here is, and that, guys, it's pretty much identical here because it repeats nonstop 90% of the time, is if you're to reclaim the POC, let's say you reclaim this value area low. Well, you reclaim this, you go above. Most people where they lose money is that they short aggressively at the POC on a longer periods, right? This is multiple days aggressively here. And I showed you earlier on SPY on a larger time frame that it did not work. You had to wait for the retest of it. Same concept. You reclaim value area low, you went above the POC, you bounced off of it, and look here. You got a little rejection here, but not great. This is your entry, and same thing is here. People short here, you might get a little rejection, but you have to be super quick. The weakness comes in once you dip below the POC and you come, and that's where you take a short. And if you look right here, is this pretty much what I'm explaining to you guys right here? Same story. You reclaim it, you go above it, you short it here. One thing that you have to consider here is the POC and value area low are very close, and you have to be really quick on profits if you're shorting. Some more risk averse people would take this scenario here. Even if it pops above, reclaim, short a retest of value area low. And what happens if you don't get a retest?
You don't take the trade.
Yeah, there's no trade, guys. You move on. You don't force it. There's no trade. You just move on. And then balance to unbalance. This is your bullish reversal. So it's pretty much like the opposite. Like where would you go long? you reclaim the value area low. So this is another option. You can go on value area low here or on a POC. And this is what I was trying to explain about the consolidation POC, like here. If you're able to reclaim this POC and then you kind of give a little bit of support there, that's not a bad level as long as this value area high is not really right next to it and pressing on it, right? So for 50 cents, would I take this trade here? What do you guys think?
No, not enough meat.
No, not enough meat.
Yeah, I don't take this trade. Like for me, this is a no, it's a no-go. If it comes back here in the retest, no, I'd rather wait for it to do this, accept the new value area and then go to 70. I'd take a $2.50 trade. Because I can make money. This immediately tells me 3 to 1 or something along those lines. If I go in here and I put my stop loss right above it, and my target is here, it's 4 to 1. Again, it's about probabilities of your setup, not if you win or lose. Same setup, same thing I'm showing you here. So it's something that you guys can kind of go over and look at and kind of replicate it. Look for it. Look for it tomorrow in the market, right? When we open, just see how we behave around these inflection points of value area high and low. Okay, then here, I'm not going to go through these here. You have it, you can open it. On toss, you guys, oh crap. Did not mean to do that, Microsoft. For toss settings, you guys have to grab the study from the Discord, import it. If you need help, just ping me or any admins in the Discord, they'll help you. Trading view, this is what I use. I explained this to death, why we use 68. Session, same thing, VPVR, I just increased the rows to see a little bit, and then PVP. Cool trick about PVP, and I don't know who's used it, who hasn't. I'm just gonna show you something when this is, I believe the Munch showed me. Let's see. So if you look at PVP, if you go under inputs, you change this bar to monthly. If I change it to 12 months, right, it will give me a year worth of PVP, right? And then if I go on a daily, and if I look at the value areas, so for me, for instance, I'm just gonna remove. Let me redo it real quick. Okay. So now if I look at this, and I want you guys to understand this. So for SPY, what does this mean? I want somebody to tell me what does it mean in terms of balance and imbalance.
We are out of 2021 value area, and for 2020, now that line that you were showing, that was the value area high. It's this line. So
This
we'll
is
have
the
to
new
see how
value.
the
Yeah, this is our new value, guys. On ES, if you do this on ES, we're also out of the value area for 2020. So that's exactly what he was talking about. So here's your value area low for 2021, right here. And where do we bounce multiple times? And now you finally means a year-long balance has been broken. So now what do you do? Let me just bring this slide up. First slide. When you break balance, what do you do next?
Or acceptance.
or rejection, yeah.
Or a rejection. The market's gonna look for what?
A new value area.
New value.
We're gonna look for new value. And the cycle just goes round and round.
Round and round.
So now we can expect, a bounce on this value area high and see what happens. So long term, when I say long term, this is big boy stuff. They can come here, they can get a bounce, and they can push it 36.52. If they reclaim this level here, they can go here. These will be the scenarios. And then here you have the value area high or low, I'm sorry, of the current year, which is not done. So until we get inside here, you're really, this would be the bullish case that we can get. Hopefully I don't have to tell you what we would do at this level.
Short it.
It's the 80% rule.
Short.
You can play the 80% rule correct on the yearly, but you better be ready to put some capital out.
Yeah, that's right. If I'm ready long term and I have a sort of like scaling in as long as it's keep moving. Okay.
That's correct. You want to
Thanks, sir.
regain this value area low of the previous year. Until you regain it, we are still in imbalance. So there's a chance we bounce here. Opportunity for short. Trust me, there's going to be a lot of people crying here about short soon. Give it 2 weeks. We want to short here. Once we break inside of this value area low, and this level is probably going to ring a bell for a lot of you guys, the 3,200, based on the clouds that we talked about.
Wasn't it like the
We
midline?
played this earlier in the week. Those were going from like 1.4 to like 4.5 a contract.
What are you talking about, Josh?
The 3,600 puts this week.
Oh yeah.
Yeah, I played those earlier this week. You're calling them out, and those things went crazy several
Yeah, they're
times.
over nice. But this is a quarterly mid on the clouds. It's a really big level. We haven't been there for past 20 years. So it's an important level. I think the bulls will show up at 3,200. Why do you guys think a market maker would want to go below this level here? Pre-COVID high.
So they can load up on more shares.
Yeah. Liquidity hunting.
Liquidity hunting, correct. What they expect, what do you expect retail to do when it comes to this price? Go look at Twitter. Every single one of them that has Lambos, they said that they're going to buy it at 35.
Buy.
Lambo to Corolla.
Yeah, that's, and what do you think market maker, when they load up on the calls, what are they going to do?
Dump.
They're going to break their level, take their money and say, okay, well, thank you. Now you took the liquidity you gave us with your stop losses. We're going to bounce it from here. And that's a lot of times you hear, man, I had the right idea, but they just went a little bit lower and then they exploded higher. So that's usually what happens, right? It's about liquidity. They care. They buy large quantities. They don't buy 100 shares. You can buy 100 shares of AMD anytime, but go try buy like 30 million shares of AMD. See what happens.
You won't get filled.
Oh, you won't get filled. There's certain paperwork you have to file, right? If you're over 5% of a company, there's certain rules you have to follow. There's a procedure, right?
That's crazy.
Order rejected.
Yeah.
Yeah, that's a problem. Your order's too big. Oh, sorry.
Also, I think if you're putting in 30 million shares, you're not gonna go on your broker. Like some bank
No.
will do it for you.
No, you go through the back doors of, dark pools, private exchanges. You're not going to be buying where we buy, because the goal of them. You guys know why they use dark pools?
So you won't fluctuate the market price bigly, and also so they can use trade against them in their dark pools and make money.
Exactly. So they don't want to give you their intention of why they're spending $100 billion on Moderna in 2019. Well, here it comes to 2020 and we got COVID, and Moderna goes from 20 to 550. So the idea between dark pools is to hide the intention of what they're doing.
Yeah, they don't want to give you their formula.
Yeah. And then time frames and trader types. So I'm giving you a little bit of idea, like if you're using different time frames, if you're on a daily, you will have to find this yourself, what type of trader you are. If you're new, I will not know who you are for a little bit. It usually takes me about a month or two to figure out who you are if you interact and you post your journal, to learn who you are, right? And then, if you need more help, I do offer free 101s for you guys. Once you do a little bit of more training and you understand it, you guys can come to me and I'll be glad to hold 101s. I was supposed to have one this morning and one afternoon. Just the way I am today, I just don't feel all too well. I don't know if I'll be able to hold it today, but if not, many of you guys have took advantage of it where we met 101, not only once, multiple times, and kind of put a plan for you how you're going to trade and execute. So once you kind of get familiar with this stuff, a volume profile, and there's a lot of knowledge besides volume profile that we have, like orbs. We'll probably hold a class on that. Maybe Catching Rockets can do it, or next week, this week. Kind of incorporate it, right? And you find what fits. I think volume profile fits all of them. You have to use it to a certain extent. And if you guys haven't realized, just go back and chat. I don't know how far it goes, and look at Slabby's communication like 8 months ago versus now. The guy just talks volume profile now, and it's just funny to see. He came in from being EMA, moving averages. He said, fuck that. I'm just using value area lows, highs, POCs. How many times do you guys look at Slabby commenting, PD POC coming, I'm shorting here? And that's that he accepted the learnings too, but he's
all the
just,
time.
you take what we offer. And not in, guys, I'm not here to enslave you to be in my Discord. I don't care if you leave. But if you're going to leave after 30 days and say something doesn't work, then it's like, okay, well, that to me doesn't make sense.
Sounds like a you problem.
It sounds a lot more like you problem, and you're not willing to put the hours in. And if you're not willing to put hours in, I'm not going to put the hours in for you either. I'm not going to waste my 1 hour of time to give you guys. There's like 300 people in Discord, and I would say maybe 30% of them had 101s with me. Just multiply that by hours. And usually it's like an hour and a half, 2 hours.
Nobody's gonna hold your hand here, but you 100% if you're willing to work in.
If you need help, come to me. Tell me what you committed. I suggest that you read Trader Dale volume profile. Highly, highly suggested. Buy it. Put it on your nightstand. Read it. Mark Douglas should almost be, if I was to put any guidelines in the government, would be the old traders read that book before they place a trade, and that they pass a test of some kind. So it's really important that you're mentally ready to trade, not only technically where you can know the levels or whatnot. Levels are easy, guys. It's super easy to identify levels where we're going to reject. I promise, I don't take away the candles from me. I will tell you where every one of these is going to reject or not. Every single level I can give you off of this. I don't need more, but the psychology and the mental side is more important than the level.
What did you want me to teach? I missed it.
Maybe orbs sometimes this week, next week, whenever you have time, depending on your
Oh
work.
yeah, sure. I'll do that. Yeah, no problem.
So, and you can do, you can find supply and demand. There's a video I did, I believe Catching Rockets has the video, finding supply and demand, but no candles. And that encourages you to not be biased to the upside or, downside. You can do that. And the more unbiased you go into the trades and you let this slide dictate, are you biased or not, is right here. Let this drive your bias for the day. Every morning, look at it and see what it tells you, and then you'll know what type of day you're having or not, where you can expect. If it fails, you're expecting 80% rule, and move on. Okay. All right. So let's see.
I got a little off topic question. So for my trading view, when I chart my levels on my laptop, like I'm logged into my account, but when I go on my phone, it doesn't transfer. Does anybody else have that problem?
I don't personally.
No.
Are you logged in on the same account as you are on your laptop?
Yeah, it's the exact same one. And then I even like
it's set to whatever layout you are on. So if you save a layout on TradingView on your desktop, then you got to log in and grab that layout on your phone too.
How do you wait?
That's right. Just copy it on your desktop and like name it. And then
towards the top, it should be towards the top
load.
right.
Correct.
Yeah,
I can send you a screen recording on the iPhone if that would help you.
Yeah,
right yeah. Can you send me that, please?
That's right there.
Yeah, I'll send you a screen recording. Give me a couple minutes. I'm just driving.
Okay.
Yeah, that's layout right there. Shorty's
Yeah, I
displaying
think
it.
he's talking about this right here, Rafa.
Okay. So I just pick one. Okay.
Yeah, so if I pick something like publish, this is sequence. I should probably change the colors. This is his like layout, and if you save it here, I wouldn't be able to see the levels from this level. Like he's using this for clouds. I wouldn't be able to see that on mine, where I'm using like Shorty version 2. This is my layout here. The good background, the white.
God, Sequence's background is so much better.
I like the dark lights in the morning.
Yeah. So time frame, if you're a long-term trader, you know, you want to analyze profiles maybe a week, sometimes a month, or use the composite profiles, you know, 10, 15 days, kind of play with it, see what happens. It's good to know whenever you're kind of going in these imbalance runs, where the value is for 2021, for 2020, just like I showed you now. So you know where potential buyers in the bounce or reversals could happen. So you want to be around them. Then pretty much the rules that, you know, we've been adding to since we started the Discord. These levels will tell you, you know, trending up, take the bias out or not. Read them, make sure you understand every one of them. If you don't, just reach back to me and we can help you. And this is your 80% rule. This talks about divergent POC. This is the volume accumulation setup in a nutshell, right? When you explode from the volume accumulation setup, most likely than not, you'll come back to that level and the longs are going to protect it. If it starts new period above or below value, it's trending. So that kind of reflects the point that we just talked about earlier, the 3 points of open above value, very high. And if it continues making higher highs, you're trending up. If the price is inside the value, the bottom of the value acts as a pivot support level. Once price falls below the value, that pivot level will become resistance. What does this remind you? What we just talked about? Is this the support and resistance flip?
Yes. Price is inside.
This is your support and resistance flip. When the price is inside the value, top will act as resistance. Once the price climbs above the value, the pivot will become support. So it's the same concept as we just talked about here. So the rules will tie, but you have to truly understand it, everything in order to make sense of it and that it clicks. Okay. And the more, if you go through it on your own, read the PowerPoint, take notes, and you're like, hey, Shorty, I need 1 hour to explain. I'll devote 1 hour, but you got to tell me what the issue and what you don't understand. If you tell me I don't understand the whole thing, there's no way. Okay. Then acronyms, I added this. Scott gave me an idea on this, so I'm kind of giving him credit. I started adding some stuff. If you guys see more and you want to add, just let me know and I'll paste it and I'll add it into the PowerPoint. But I think it'll be good for the new members because we do a lot of acronyms when we're trading, and sometimes people get frozen. You know, they don't know what it really means. And if we can limit that, that would be good in terms of communication and clarity. Okay, that's
I
pretty
don't know
much.
if I'm missing it, but I don't see structure high on there.
Where was it? I think it's right here. Well, yeah, I didn't put structure high, but we can add it here.
Just, I mean, yeah, so people don't get confused.
Or it might be worth adding on the SVP slide as well that you need to have
You've got it marked as
real-time data
SSL,
enabled.
Shorty.
What is it?
You've got it marked at SSL instead of SSH, I guess.
Well, SSL high or whatever. Oh yeah, you're right. Yep.
Man, don't mess with a dyslexic person with their acronyms.
Yeah, don't do that. That and numbers. I still don't know half my family's birthdays. I flip them unless they go above 12. I flip everything. So for the new people, if you're to say you learned something 1 through 10, 10 being yes, I learned a lot from volume profile, how would you rate it? Don't make me quiz you, so be honest.
10.
Okay.
I would say 10.
Okay. What could be better? What would help you guys add more value to like learning in this? And I'm open, just criticize it. I'm not gonna go cry if you tell me, hey, do this. Dumpster, yeah, don't. Okay, and Dumpster, the guy, he's the jokester of the Discord. We don't know what he does and how he did it. But yeah, don't take anything he says seriously unless he's giving you clear direction on.
You know, for me, there is one thing, Shorty, that I think you could share, just because I think it helped me so much, is how important it is to take those A++ setups and like to take it a step further. What Shorty did with me was he told me find your setups the night before and only take those trades. Like, don't anything that's happening live during the next day, ignore. I mean, like, you can chart it, whatever, but only take take trades that you defined like the day before when you were charting, and you found like really high quality setups. That way, you're not FOMOing into trades or whatever, or making mistakes. You just take those trades that you defined the day before when you were charting, and if it doesn't happen, then you don't trade. It teaches you patience. It teaches you to only take high quality setups, and you know, you already draw like your stop loss and your take profit and all of that, and you just slam it home. Like, either it hits your stop loss, or it hits your profit, and that's that. You're done.
Yep. And I think it's important. And a lot of you guys that came to help for me, I put you on the 30-month single trade per day. And Tony from the Discord, he struggled at first, but if you look at his his log, he's getting a little bit better. You look at Dr. Red, not sure if he's on, but we had multiple sessions, we worked on it, and he was able to be, I think, first time 11 days green in a row, and made quite a bit of money. And when you start compounding and you don't just take trades, if it's not in any of those levels, you do not take the trade. That means the price is in the middle of nowhere. You only trade when it's hitting your levels, nothing in between. You don't have to jump in it because of FOMO. You just have to wait and wait for the setup. Eliminate the FOMO and the urge to be consistently in a trade. It's better to take one trade a day, make $300, and then multiply by 5, $1,500. Multiply by 4, well, now you're making some serious money, right? $6K a month is not bad, especially if that's your side and if you still have a full-time job or not. It's a really good, side income.
Did you just see, Shorty, that we're all gonna die?
Why?
Because Jim Cramer said it's highly unlikely that Russia will use nukes.
Oh my God, he should not fucking comment that.
Shit.
I think he blocked me. Him and Joe Biden.
Richie just posted it in the main chat.
Oh God.
So it was nice knowing everybody.
So much for trading.
Oh God.
I think one thing which could also help is like maybe people who start playing SPY instead of SPX.
Yep. Yep.
Because like the percentage move is the same, and you're not gonna lose $100 or $200 on a big candle.
Yeah, if your account is not, so my little account that we started 1K, it's like 17.6 now. So I do trade SPX on it, right? Because I have the proper discipline to cut it, or get out of it. So I trade SPX on it, and I started at 5K on it, right? And it would be the contracts more towards later of the day when the Theta did the job of taking the value out. And I would look for, 200 to 400 range on the contracts with that account. If you're new and, do not trade SPX, do not trade Tesla, these volatile stocks. Look at AMD, look at certain stocks. SPY is good, Qs are good. Even SQQ is pretty good to trade, or TQQ. They're going to be cheaper and you can make the same in percentages. It's not about making money as it is for you to learn why and how to make money.
You can also trade XSP and get like the same tax break as SPX.
Yeah, I mean, many ways, but if you're not comfortable and you cannot, this is the, you cannot compare you or anyone to anyone else. If my profit goal is, let's say, 5K a day, me and you are on a different levels. Not saying I'm better, but I've gotten my account to be
Way different level.
to that point where, a couple of percent is 5K. If your account is at 20K, you can't expect to make 5K per day, guys. That's a lot. It's a big percentage. And let me see if I have something just for people. This is the compounding calculator that we shared not too long ago. So somebody said if you start with 1,000 here and you compound it 2% daily. So within, a couple of 265 days, you're going to be at $1,000. If you compound it daily for 260 days, you're going to be sitting at almost 300K or 200K. and this is 1,000 at 2%. You increase this guy to 3%. You know, many people will say, man, that 1% is not going to do much, right? Did it do much?
Sure did.
Now, question for that. So, you said right. For your stop loss for the day. So if I'm down, let's say 2% on my port.
Yep.
At that point, should I just stop trading? Like if I already, let's say if I took 2 trades and I lost both, do you think I should just not over trade?
Well, if
Or
you
unless
trade
there's
and if you have the setup, if the previous losses are going to impact your next trade, and you have to be honest with yourself, then you have to stop.
Okay.
So usually, you know, if you have 2 losses row in a row, like in a row, that means you're off. Somewhere your bias is off.
Yes.
And the way I look at this, right, when you start your, let's say you start 1,000, you really don't, and some of you guys are able to go from 1,000 to like 2,500. I'm speaking of Rayon here. He went really, really quick. And if you guys look at his consistency, he didn't even believe it. He would hit 200, 300, 300, and he was like, holy crap, man, I just made like 2-3 grand. And then what did he do? A typical mistake that he does 2 times
Sized
already.
up?
He
Oversized.
sized up.
Yeah.
Guys, just look at the path. You don't have to, for 60 days, as long as you're going on a path of compounding, do not disturb it. Your goal is not to disturb this. And if your 3% is, you know, daily growth, don't let your port lose more than 3%. At least stay positive from the previous day. Does that make sense?
I think I'll never get over your grammar making me think that you were saying for me to increase my sizing, and I'm like, I'm not really comfortable increasing my sizing, but I'm gonna listen to Shorty.
Yeah, I didn't mean to say that. I said do not increase your size.
I literally did it. It played out. It panned out, but I was like, and actually, like that was the first time I felt stressed in a trade for a while because I literally increased my size. Oh, anyway.
Yeah. And guys, on a small account that I had, I only took 1 contract each of whatever I traded. And you guys saw whenever I posted that it was $700, $600 gains. I take, let's say 5 trades at 200 a pop. That's $1,000. And I did not go heavy into capital. Like not at all. And now I was just looking for those probable setups and just adding a little bit by little bit. You know, if you're living off of this income, then, you know, you add a little bit more stress to yourself. But if you have, let's say, a larger account and you have a job or whatnot, and you're trading this on the side, like you're working from home, you just have to preserve this number here. Your goal is to preserve for a year or 2, and then you're gonna, you know, once you get into these numbers, guys, once you make $100,000, I would say your life in trading changes.
Yeah, it's like the way I've been thinking about it.
Mhm.
Like, get that. There's just the safe amount that I could put towards it. Yeah, it's amazing.
Is there a link for a spreadsheet so I can keep my logs? Do you have one? We're
Yeah,
working on making.
yeah, so your logs, if you're new, if you go under trading, let me go here. If you go under trading here and you go under logs, there is a log here. There it goes. This is the log that you should use to log your trades.
Not the future one, the one above it.
This one?
Yeah, the one that you're pointing to.
Oh, sorry. Yeah, it's futures. Yep. Yeah, this is the log you want to trade for equities here.
Okay, sounds good. Better go on it.
Yep. And if somebody needs this, I can post this. Maybe I did. I don't know. I'll post this if somebody wants to use it as a reference.
You didn't post it, but you said you were going to last time.
Okay.
Yeah, please post it.
Yep. And then what you can do is you can put your account size and, you know, change these to be days instead of dates, right? So you don't feel forced to trade.
Okay.
And then just go down. Just drag this bad boy down. And now if you start day 1, your goal is to make 30 bucks. The next day, you know, also 30, and then it starts going, right? Within a couple of, let's say 60 days, you're going to be looking pretty good.
It's good stuff, man.
Okay. And if you guys have suggestions, send them over, and then we'll incorporate it and see how we do and go from there. Just know this is not a sprint, guys. You're in a marathon. If you want to learn the trading, you're not going to do it overnight. All the people that are making a ton of money trading, they've done it, 5+, 10 years. It takes time.
Yep.
Can I ask a really random question, Shorty?
Sure.
On direct brokerage accounts, you can sell covered calls, right?
Yes.
Okay. I thought so. It's kind of hard to find information on that.
Yeah, you can, but you will have to call them to make sure the options are enabled for that account.
Yeah, I knew that part. I just got approved for the direct brokerage account, so I just wanted to make sure that was a thing.
Yep.
Yeah, it's like there's 2 levels on that for like IRAs. There's like one you can sell covered calls, the other one is buy, sell puts and shit.
Yep.
You can't do anything fancy like dragonflies or any of that stuff. Though.
Yeah, because you can't use margin. I know that part. But so anything you could do with a cash account, you can do basically.
Yeah, for sure.
Pretty
Perfect.
much.
That's all I need. Sounds good.
Okay. All right, guys. Well, I think I'm gonna go back to sleep.
Can't thank you. No, man, you gotta go back to sleep. There's football coming on.
Oh yeah, I forgot about that.
I'm definitely going to sleep.
Yeah, I gotta go sleep, guys. I'm so exhausted, man.
Thanks a lot, Shorty, man. Can't thank you enough, bro.
Thank you.
Yeah, appreciate it.
Bye. Thank you. See you next time.
Shorty, really quick, check your DMs.
Thank you.
All right, thank you.
Thank you.
Later, Rockets.
Later.
See you, Rockets.